Moneycontrol India Fintech Conclave. Connect, Ideate, Innovate.
In the country. This event is brought to you with RIL as associate partner, GRIP as alternative investment partner, IDBI Bank, Poonawalla FinCorp, Xiaomi, SBI Mutual Fund, Ugrow, and Magic Brick as our event partners, and our ecosystem partners team and TIE Mumbai. We are thrilled that we managed to draw this crowd despite this being a holiday. So a big thank you to all the marquee speakers and attendees for making it here. I'm going to request you to use your smartphones liberally to share insights with everyone who couldn't make it in person. Just use the hashtag #MCFintechConclave. With that, I'd like to invite Moneycontrol's editor, Binoy Prabhakar, on stage to deliver the welcome address that will give you more context about this conclave.
Good evening, everyone. Two things. One, the speech wasn't written by ChatGPT. Two, a very happy Holi to all of you and your families. Holi is about colors, it's about the joy of togetherness, and the India Fintech Conclave is about assembling various stakeholders together under one roof. This flagship event, which Moneycontrol is holding for the first time, has Union Minister Rajeev Chandrasekhar, an entrepreneur himself, RBI Executive Director Ajay Kumar Chaudhary, who oversees the FinTech department, and leading policymakers from NPCI and ONDC. We've also gathered a galaxy of bankers and startup founders who are reshaping the FinTech landscape in India. Please join me in welcoming all these changemakers who will discuss, debate, and come up with solutions that will strike a fine balance between FinTech innovation and regulation. FinTech in India is having a moment. In many ways, FinTech today is what e-commerce used to be a decade ago. It's seen an explosion in usage, attracted a record funding, and created a number of promising unicorns and soonicorns that are disrupting the ways we pay, lend, borrow, and invest. And the rails powering this revolution, India's digital public infrastructure, be it Aadhaar, UPI, eKYC, DigiLocker, account aggregators, and ONDC, these protocols have become a template for the world to learn from. But as they say, with great power comes great responsibility. While this is truly an inflection point, a tipping point for fintechs, startups ultimately have to pass the smell test with the regulators. We hope to find solutions to safeguard the interests of consumers while at the same time foster innovation and disruption. These are themes that we constantly shine a light on at Moneycontrol, and we hope forums like these will go a long way in charting the future of Indian fintech. Because if any country can become the fintech hub of the world, it is India. This is that moment. Please enjoy the sessions. Thank you and welcome.
All right, thank you for that, Binoy. With this, we come to the inaugural session, speaker we all have been eagerly waiting for, Minister Rajeev Chandrasekhar, who holds twin responsibilities as the Minister of State for Electronics and Information Technologies and also skill development and entrepreneurship in the country. He leads several key initiatives such as Semiconductor Mission for India, Electronic System Design and Manufacturing, Deep Tech Investment Promotion, Startup India and Technology, Policy Development. Besides being a politician, Mr. Chandrasekhar has been a noted entrepreneur and a technocrat. A three-time parliamentarian, he's currently executing the India's government mission for building a $1 trillion tech economy in India by 2025-2026, and also working towards making India a global skill hub. So please put your hands together for our chief guest, Mr. Rajeev Chandrasekhar, who will deliver the inaugural address.
Good afternoon, all. Thank you, Binoy, for inviting me to speak here today. My greetings to Mr. Chaudhary, Executive Director, Reserve Bank of India, and all of you present here, ladies and gentlemen. So I was sharing a story just before we walked into this about my connections with Mumbai. And I think I have a connection that is older than many people in this room. I can see a few gray-haired folks in the room, so they would probably remember 1995 when I started, or I was involved in building the first mobile network here in Mumbai. I certainly believe then, and I certainly believe now, that Mumbai is the heart of entrepreneurship, heart of really out-of-the-box economic activity. And that is true then, that was true then, and it is true certainly today as we speak about fintech and look to the future. Since the event is about fintech, let me just give you a quick summary of where we see technology and fintech as almost like a report card. I think it is clearly now being recognized by the world that India has become a preeminent nation, has become the preeminent nation in using technology to transform people's lives, citizens' lives. UPI and the corresponding fintech ecosystem is a component of that vision, component of that goal, has reformed government and governance, ensured financial inclusion, formalization of our economy. And most uniquely, and this story when I repeat, as I travel around the world, is something that amazes people about how a problem that was solved by our Prime Minister, the problem of a long-standing mistrust between government subsidies and government benefits and the citizen, that famously was characterized by a Prime Minister in the late 80s as a system of governance that entailed a cost of 85% when 100 rupees left Delhi, 15 rupees reached the beneficiary's account. That problem that defined India for decades, defined Indian democracy and governance for decades, was sought to be solved by our Prime Minister in 2014-15, and that has spawned, in turn, a fintech ecosystem that is among the fastest, most admired, and clearly the most creative fintech ecosystems in the world. At 87%, India has the highest fintech adoption rate in the world against the global average of 67. And the fintech ecosystem is a key part of what we see as the digital economy, key part of what the Prime Minister refers to as India's decade, and the digital economy goal of $1 trillion by 25-26. That is where we are today. So let me give you two kind of snapshots. One is a backstory to this, and let's look forward a bit. The backstory to this is in 2015 when the Honorable Prime Minister launched Digital India. And he laid out three broad goals that he sought from that policy, that scheme, that initiative. He said, number one, that he wanted technology, and he put this as number one. He wanted technology to transform citizens' lives by creating changes in governance, by changing and transforming democracy. He wanted, as second point, he wanted to expand the digital economy component of the overall economy, create more opportunities for our young Indians, and in turn, trigger entrepreneurship in the digital economy. And third, he laid out these three goals, and the third goal was, from over 3 decades of being a consumer of technologies, he wanted India and Indians to be leading technology, to be designing, architecting, building devices, products, solutions, and platforms for the world. So, from a consumer of technologies to a producer of technologies. These are the three broad objectives. So if you fast forward to 2022, thank you. and you take a report card of these 3 goals, you certainly come to the conclusion, even if you're the bitterest critic of the government, if there is such a thing, of course I don't count Rahul Gandhi in that, but if there is such a thing, that we have progressed significantly on all those 3 goals. And in 2022 July, when we were celebrating the 7th anniversary of Digital India, and I was on the stage with the Honorable Prime Minister, I told him this story about how I was in the audience when he first laid out this vision in 2015. And I was, by then, about 10, 12 years in politics. I was as cynical as you could get. And I told him very candidly that I too did not realize that those goals that you had set before the nation would be met, and we would travel such a long distance in this short period of time. And certainly we have traveled a significant distance in the last 8 years since Digital India was launched. And if you have any doubts about it, go to the colleges of India, and I have as the honor and privilege of having traveled to 42 colleges in this last 18 months since I was minister. The energy, the optimism, and the confidence amongst young Indians towards the entire space of entrepreneurship and technology entrepreneurship in particular is something to be seen and experienced and to be believed. So we are today, like I said, in these 3 domains, we are moving forward significantly. We have a goal of $1 trillion digital economy. And we are, in 2014, a nation, we always had a digital economy, but our digital economy was dominated by the ITA space. If you look today where we are not just growing robustly in the ITA space. We have clearly established a mark globally around the internet with D2C at scale, whether it is e-commerce, whether it is fintech, whether it is many, many categories of applications and platforms and solutions on the internet. And we are slowly and steadily moving into many new areas that include electronics, microelectronics, design innovation, manufacture, semiconductor design innovation manufacture, AI, the blockchain, high performance computing, cybersecurity. So clearly, a single dimensional digital economy that we inherited in 2014 is becoming a much more broad-based, high-growth set of independent, asynchronous segments of the digital economy that are all growing fast, rapidly, and are creating innovation in their wake. On August 15, 2021, as we stepped into our 75th year of independence, our Prime Minister looked forward to the next 25 years and coined a phrase. It is a phrase that describes the next decade, and he called it the India Techade. And that India Techade is a decade full of technology opportunities that today is not just a buzzword or is hyperbole or is it not rhetoric. It is really about saying very clearly that the digital economy piece of our overall economy will go from the 6 to 7% that it was for many, many years to almost 22% by 2026. So this is the broad backstory. This is where we are today. So what do we do? What do we expect? What can we expect going forward? So certainly I believe, and I will certainly share with you what we are doing in the government, and it's of course for you all to say how far forward you will go. As the government, we are very clear about this $1 trillion opportunity. We have kept this front and center. Our Prime Minister has mandated that this India Techade will be built by Indian entrepreneurs, Indian startups, and young Indians all over the country. This is not something that will be dominated by or concentrated around 2 or 3 or 4 companies, as we have seen for 65 years of independent India's history, where economic activity were concentrated around 4 or 5 or 6 groups. This is a landscape. The digital economy is a landscape. There will be thousands and hundreds of thousands of young entrepreneurs innovating at the speed of light, or whichever metric you want to compare it at, in areas as diverse as, like I said, the blockchain, to AI, to semiconductor innovation. We in the government, our first step is that we will create an enabling framework of laws and policies. And what is certainly of interest to you as the fintech entrepreneurs and the fintech ecosystem is that shortly we will be legislating, we will be taking to government and legislating a digital personal data protection bill. And for all of those who were very intimidated and overawed by the previous draft, this is a bill that has 3 central objectives that we have managing to harmonize. Number 1, that the bill will not create any hiccup or road bump or any sort of hurdle to the innovation ecosystem growth. That is central to all our legislations, that the legislations are enabling legislations to the growth of our innovation ecosystem. So in the DPDP, first, the innovation momentum will continue, citizens' rights will be protected, and the exceptional circumstances under which the government has to have access to personal data in emergent situations will be also permitted. Those of you who have seen the draft, it is a very simple, easy to read draft that many people think will put lawyers out of business, which is not a bad thing. So this is really about being easy to understand legislation that lays out what the obligations of a platform are, what the rights of a citizen are, and how those will be balanced and met. Around the corner, we will have a Digital India Act. The consultations and discussions around its architecture and its goals is starting next week, or this week, later this week. And the Digital India Act, for those of you who have read about it, or those of you who know about it, already know that it's a successor to the IT Act. But for those who don't know about it, this is really a global standard contemporaneous legislation that addresses the future of the internet, addresses the future of the tech innovation ecosystem, addresses issues of openness, user harm, accountability, emerging technologies, the guardrails to handle risks, the various types of intermediaries. In 2000, when we looked at the internet, there was the internet and there were these ISPs and maybe a few platforms like yahoo.com. And today, the diversity of intermediaries, the complexity and the differences between different intermediaries require different types of regulation and different types of rule making, and so therefore that DIA will recognize that. And it will be, as with everything we do, enacted, built, designed with only consultation. To give you an example of the amount of effort that went into consultation for the DPDP, the Digital Personal Data Protection Bill, we consulted for over 90 days. Each of those consultations were lead managed by me. I was present. Consultations were deep. Every view, as bizarre or as absolutist, were taken on board. And when the views were divergent, we spent a considerable amount of time explaining our position and then getting people to agree on the goals and objectives of the legislation. So the legislations that we are going to create are legislations for you, and you can think of MeitY and the Government of India as the enablers of that legislation. And this is a reversal of the original process where there would be a government legislation that would be thrust on the ecosystem, and then there will be all kinds of blowback and confusion created by that. So we approach it that way. So the DIA and the DPDP will be 2 prongs of the innovation ecosystem, the legislative framework. This will, and I don't mean to say this in a way to scare anybody, but certainly there will be some behavioral changes and there will be some changes in the way platforms interact with consumers and citizens. The days where personal data could be harvested and learning and algorithms being built on that will certainly change. The days that anonymized personal data would be stored for many years and days, and you create these learning platforms on top of that, learning models on top of that, will also certainly, I think, have to be replaced by something that is much more instantaneous in terms of learning and storing. So there will be these incremental changes. It will not be business as usual, but the AI intensity in fintech, as with almost everything on the internet, is something that I'm sure most of you already know, but will certainly increase. We are launching by the end of March or early April the India AI program, which will be one of the largest publicly assembled, publicly available data sets in the world, with 3 centers of excellence that the government of India, under the Prime Minister, has recently announced in the budget. And so the India AI ecosystem, working with the fintech ecosystem and with any other ecosystem, will certainly catapult and catalyze the transformation or the next generation of fintech and other parts of the internet. I will not say anything more excepting to say that our goals, just share with you that our goals for the future of the internet is that we expect the internet to be open always, that is free from any dominance, whether state or private sector. We expect the internet to be safe and trusted for all our digital Nagriks. We have 800 million Indians today using the internet. By 25, that number will be 1.3 billion. So the internet has to be a safe and trusted space. And accountability, which is that the internet and all platforms on that will always have a legally drawn out design of accountability to the consumers. That is our goal. And as I said, the fintech ecosystem is a shining example of India's entrepreneurship, India's confidence, and young Indians and young entrepreneurs messaging to the world that we are here to compete and win. And I hope in the coming years and in coming months and coming years rather, that this type of momentum will continue. And I only want to share with you that the government of India, on its part, will do everything to continue the growth, momentum, and expansion of the fintech ecosystem. Thank you very much for inviting me again here today. Jai Hind.
May I please request you to stay back, sir? All right, thank you for the inspiring speech, sir. Tech leads India and India leads tech, indeed. I'd request you, sir, to kindly stay back and have a seat with us. I would now like to invite Moneycontrol Shweta Punj and Chandrasekhar to moderate a conversation with the Minister.
Thank you very much, Mr. Chandrasekhar, for that very detailed analysis that you presented, and it was very inspiring. A whole host of entrepreneurs are here in the audience, and I think you've not only assured them, but you've presented them with a vision which will aspire them to innovate and come up with interesting products that will ensure that India always has the edge. So thank you, and it's our privilege to welcome you here at the MC FinTech Summit. I'd like to begin by asking you, what's the message that you want to give out to the world? Because you're at the helm of this digital revolution that India is undergoing at the moment, in the driving seat of what the Prime Minister has termed as India's tech aid. And there is a lot of interest in what's happening in India. Everybody wants a little slice of what's happening in India. Big tech are looking at India, expanding in India. What's your message to them?
So I think the best way to say this is to read back some of the quotes that people outside of India make about India and our innovation ecosystem. So for example, the minister, the UAE digital minister, recently said, totally unprovoked, that the fingerprints of Indians will be on everything and everywhere digital in the future. Okay. Now, Bob Sternfels, the Pat Gelsinger, the CEO of Intel, says, look, the coming decade is a decade full of promises for India. Bob Sternfels, the McKinsey CEO, says, no, it's not just about a decade, it's a century of India. So, I mean, I can go on and on and on, and I'll give you many quotes. But I genuinely, and I've spent about 35 years in tech, I strongly believe that this is India's moment in general, but in the tech space, it is certainly India's moment. And the respect that the innovators of India command today around the world is unprecedented. And I have seen some things happen in India, but I have never seen this phenomenon sort of unfold in front of our eyes as we are seeing today. So more than anything else, the message today is, this is a playground, unprecedented opportunities for you, but there are some things that you need to understand. This is going to get even more competitive with AI and blockchain and a lot of these things that are now going to make sure that this old adage of disruption is the new normal become even more true, that if you want to remain relevant, you have to be increasingly investing more and more in innovation. So 5 years ago, what was fine for fintech certainly is not going to be fine a year later down the road. So there is that much more competition. The intensity of competition is increasing. More countries are planning to play catch up with us. And so you have to stay ahead of the pack, and you have to just do what you do better and faster.
Okay, so from a regulatory perspective, we've already seen how ChatGPT has transformed and disrupted a lot of industries already. So from a regulation perspective, what can we expect India's stand to be on artificial intelligence?
So I think on fintech, there are two types of regulatory movements. One is what type of platform, what is the gating for platforms to come online? We've seen recently loan apps, and I think there has to be something around it, and we are going to have a discussion with the RBI, the Ministry of Finance on this, where we think that there should be some threshold, some sort of verification, or I don't know, I don't want to call it licensing, but certainly some sort of gating before apps can come online, either to the Google Play Store or to the Apple Play Store. So that is one, which is the verification, trusted platform.
Sure.
The second is certainly, I think, AI is a game changer. I have said this, it's a kinetic enabler of our digital economy. In the Digital India Act, we are going to recognize AI, and we are going to prescribe guardrails for AI in the context of user harm, in the context of openness and free competition, and in the context of accountability. Now, that is not a formulation that I can produce right now in front of you, but certainly through our Digital India dialogues and consultation, we hope to evolve that.
Okay, Chandra.
So, you spoke about regulation and how it's evolving. But for a fintech entrepreneur today, the dilemma is really, who's going to issue a circular tomorrow. So people often joke that, I either wake up to a circular from the RBI or MeitY or SEBI or, even NPCI could come up with something. So how are you going to assure them that, there's not just going to be ease of business, but also some visibility and continuity in the way regulation happens? I mean, is there going to be a multi-stakeholder approach so that, they are not caught by surprise?
So one of the things, first of all, the answer to that is very simple. I'm certainly willing to give you an assurance through you to all of the entrepreneurs that it is the Prime Minister's vision, view, goal, and if you want a Hindi word, sankalp, determination, that there will not be any hurdle to a young Indian and his or her dream in terms of creating not just a fintech enterprise, but anything in the tech space. And if anybody in the government does anything to that contrary of that, they'll have to deal with no less than the Prime Minister. So I think please be confident about that. Now, certainly there is a challenge in many areas that intersect between being on the internet and being in a particular sector. So there's a sectoral regulator that swings into action, in this case the RBI, and then there is the internet regulator or the Internet Administrative Ministry, which is us. I do agree that we have to figure out a better way of working within the government between regulatory authorities and the ministries, and not allow, if there is a chaos, not allow the chaos to impact the entrepreneur. And it is certainly something that we need to get better at. We are working on it. And it is not that if there are multiple bodies involved, that chaos should be fully thrust on the entrepreneur. I accept that, but it is early days where we are seeing all of this, let us say, this proliferation of activity on the internet, the diversity of the applications and intermediaries, and the laws that are 22 years old. We are dealing with an IT Act, please understand, which is 22-year-old act, which does not even mention the word internet. We have done all this with a limited law, which is not to me trying to say that we need stronger laws, but we certainly need, I agree, much more interplay between sectoral regulators and METI.
That's very heartening to hear. Just a follow-up, sir, are you at all worried about the domination of multinationals when it comes to India's digital payment space? While we have built the guardrails, if you look at market share, Walmart owned PhonePe dominates, followed by Google Pay. Meta's WhatsApp is a contender, fourth contender perhaps. While the NPCI has been talking about a cap, it's not pragmatic to make users suffer. Is the government at all worried about the domination of big tech multinationals in India's payment space?
So I think the word that I would use is not worry as much as we are aware. And why I say use the word aware is, it is clearly our policy objective. And I use the phrase openness. Openness in the sense means free and fair competition and free and fair choice on the internet. Just like we don't like if Amazon suddenly becomes 80% of the market share, or Google search dominates search, none of those things we are going to sit down and distribute holy sweets for. These are issues that concern us, but the phenomenon of big tech, the phenomenon of dominant platforms on the internet is a reality. And we have to figure out with the tools that we have, how to make sure that that dominance does not come in the way of a consumer's right, or a consumer's experience that we want to assure the consumer of choice, non-distorted access to services and products. And so if we see that a certain market share is coming in the way of a consumer getting a free and fair choice or access to a service, we will certainly step in. And you can see the CCI today is doing its job in some certain other areas. But nobody should be of the view that a certain market share automatically means that they can play fast and loose in a sector, least of all digital payments.
So I just want to take on from Chandra's question. What is the theory or what is the philosophy of the government? Is it that you are going to give preferential treatment to domestic players to enable them, to nurture them to grow up and come up to take on the international giants? Or are we going to take the regulatory view wherein we will adopt very high standards which will ensure that there's an equitable playing field for all companies or all players in this sector?
So, Shweta, of course it is very important that there is an equitable playing field. And there is nothing in our policy that creates either an advantage for a big company or a disadvantage for a small company. That we are very, very clear about. Every step that we take, we certainly make sure that it is level playing field and nobody has an easy entry into that segment. The issue is not that. Issue is, in many cases, there is a legacy situation where a certain number of platforms have got a certain market share and dominance.
Sure.
There are two ways of approaching that. You can either use a hammer and say back down and allow market share to be given to others, which is not something that we like doing. Certainly it's not a very good way of doing it, because who will take that other market share? The other way of looking at it is to say that we will allow people to compete, and if a certain company gets a certain market share, that triggers an inspection or an observation or a surveillance on the issues of choice and distortion. And if there is any evidence of distortion, the Competition Act will kick in, and there is already a large amount of debate going on about whether the DIA also should deal with that type of situation. So I know what you're talking about, the 80% plus market share in digital payments, et cetera, et cetera. And it is something that we have studied deeply. We have had a discussion with the RBI and the Ministry of Finance on this. But currently, the model is to allow interoperability, allow more and more apps to come in with no entry barriers to them, and allow innovation to compete. But there is a contra view that you must force them to back down to a certain threshold market share. It is a very complex regulatory process. To what level do you get them to back down?
Right.
And why should they back down if they've, in good faith, they've built a market, built a business? How do you make that happen? So I would say that these are early days for this. But it's an issue that we are certainly seized about.
What can we expect in the Digital India Bill? You're holding your first public consultation on the 9th. You did speak about more accountability. Are we looking at a separate regulator, something like a TRAI?
No. Here's one. I want to make it very clear, and I don't want anybody today to get panicked or worried when I say accountability means another 4 babus sitting on them or one minister sitting on them. That is certainly not. We are not. As a rule, we are not going to be prescriptive about legislations. We are establishing in all our legislation principles. So principles of openness. The basic issue of accountability, that is, a consumer should not be lost in the internet when there are 1.2 billion consumers. They should not be lost in the relationship between the platform and the consumer. There has to be legal accountability. I should, as a consumer, be able to send a grievance. Grievance must be addressed. And if the grievance is not addressed satisfactorily, there should be an appellate mechanism. So we are building that. On the user harm part, understand one thing clearly, and I think nobody in this room will disagree with this. The internet in the early days was a force for good. We all thought it was all about hugging each other and having that warm, fuzzy feeling. But we also know it is about as much today about CSAM, it's about misinformation, it's about cyber crimes. So the harm part of the internet must be squarely addressed, whether the model is a regulator or is it just certain punitive penalties that are built in based on somebody's determination that user harm has happened or not. That is something that we will talk through and design and architect jointly with the stakeholders.
Okay. What's the government's long-term thinking on zero MDR policies, sir?
Look, I know again that's a nice headline point, and I certainly don't want to wade into this.
It's holy, you can indulge us.
I would love to indulge you in holy, but I prefer giving you sweets rather than getting into a controversial thing. Look, first of all, I don't even want to characterize it as controversial. It is what it is today. How that will evolve going forward, we will see as we go forward. It has got its fair share of naysayers, so does it have a fair share of people who back it. It is seen by some as being distorting free and fair competition, and by some people who say, no, we need a, like you said, level playing field support. So we'll wait for the dust to settle, and then we'll take a call on it for next year.
Right, we'll wait for next year for another headline.
Holi perhaps, next Holi.
The RBI recently launched the digital rupee. Have you used it, and what are your thoughts?
No, I haven't used it, so I can't comment on it. But I certainly think that's the way for us to go. I have said this in the heydays of the crypto mania, and when everybody thought that if you didn't have crypto, you were not with it and fashionable and hip and happening. So I've said that I think our ecosystem requires a much more stable evolution of digital payments, and we cannot and we should not, as we scale up our innovation ecosystem, we don't want any incidents. So I think much more stable evolution of this whole area is the digital rupee. Let's see, this is early days. I think we will see what innovations we will create around it. In future, maybe there will be a private sector, private participation in it with some criteria and laid down by the RBI. But certainly we don't want at this stage, absent of any global framework for digital currencies and digital transactions on Web 3.0 to go launch full hog into anything but a digital rupee.
I wanted to get your thoughts in on dealing with China. It's an important country for the world, considering India and the United States. We're all trying to build our semiconductor capacities. We're trying to fill the loopholes in the supply chain that came out during the pandemic. And we are also trying to build on the China Plus One strategy. Now, India has, on one hand, approved setting up of manufacturing capacities of Chinese companies in India. We've also seen apps being banned which have been linked to China. So what is the government's thinking on dealing with China from an economic point of view?
So Shweta, I want to say something very clearly and unambiguously. There is no policy of the government of India today that is China-centric. There is no prohibition of any Chinese company from investing in India. There is no prohibition of imports from China. There is nothing China-centric, nor are apps taken down because they are from China. When they violate some laws of India, when they violate some rules of India, regardless of whether they're from China or A, B, C, D, E, F, G, wherever, the laws kick in. So our approach to China or Chinese companies is not because they are Chinese. It is because, you know, in the case of the loan apps, they were busy violating every known law on the planet. Or in the case of some of the companies that were looked at, mobile phone companies, because they were manufacturing devices that were busily exporting data to unknown IPs outside of India. So those are the grounds. They don't pay taxes on their production of mobile phones. So those are the reasons we step in. So leave that to the side for a minute. But the Prime Minister's vision on the electronics and the associated value chains, which have been very China-centric pre-COVID, $1.5 trillion is the entire global electronics trade, of which you are aware, we've had a conversation on this. Over 900 billion is China-centric. The world wants a diversification. It is not India that is seeking it. And India sees that as an opportunity to become a trusted player in the GVCs of electronics and semiconductors. So we see an opportunity. The opportunity is created by the world's redefinition or re-architecting, redesigning of the value chains for electronics and semiconductors, and India sees an opportunity. We are today at $75 billion of electronics production. We want to be 300 billion by 2025. In 2014, we were importing 82% of our phones. Today, we manufacture 100% of our phones. 2014, we were exporting zero batta sannata, and today we export 1 lakh crores of mobile phones. So that is the progress we have made. And I think the idea that the Honorable Prime Minister has is to become a significant pole around which the electronics value chains of the future is built.
Sure. So we've seen success in mobile phones. What are the next sunrise sectors that you're focusing on?
I think IT hardware, that is servers, laptops, tablets, is certainly a category that we see India doing well. The wearables, the hearables and the wearables segment, again, we are doing very well. There are many Indian brands that are doing extremely well in this, including Boat and all these brands.
Right.
And it again feeds into our growing semiconductor capability and electronics design capability. So there is a whole innovation ecosystem that can be built around and is being built around, is growing around this burgeoning electronics and semiconductor manufacturing space. So I see immediately in the short term, the server space, with the increased growth of the cloud in India, we are going to be the largest market for servers in the world. And I don't know if you are aware, but almost 99% of all servers today consumed in the world are made in China. So the HP, the Dells, the Lenovos, and the Apples make all their machines in China. So certainly that is an opportunity for us. And like I said, the wearables, hearables, which is apart from the mobile phone, the fastest growing segment in electronics.
Chandra? And, okay, so Chandra has just prompted me for another question that I should ask you. This is, of course, on Karnataka elections. You all are facing an anti-incumbency in Karnataka. what are you hoping and banking on that will help you get back to power? Are you confident that you would get back into power?
So let me correct you on this. We are not facing an anti-incumbency. We are an incumbent government.
Right.
There is no evidence that there is any anti-incumbency. We are an incumbent government in Nagaland. We were an incumbent government in Tripura. There was an incumbent government in Meghalaya. There was an incumbent government in Gujarat. So I think incumbency automatically meaning some tragic event is going to happen around the corner is a narrative that Prime Minister Modi ji and the BJP have long since demolished. If we have done a good job in a particular state and our leadership in that state has delivered on governance and development as the people of that state wants, we do well. Karnataka, we have a tough situation because of the following reasons. We've been in government 3 years. 2 years out of, or 4 years if you want to add 4 years from 2019 November. Of that, 2.5 years was spent on COVID. So a large part of what would normally be development, road building, construction, those 2.5 years we were absent. So there is a certain, let us say, very different situation in Karnataka compared to other states. Do I still believe that the people of Karnataka will vote for the BJP? I am willing today to give you in whatever the printed RBI bank paper that we will form the government and we'll win it simply on basis of one thing. I'm not a soothsayer, nor am I trying to prophesize. That the work that we have done compared to the 65 years that the Congress has governed Karnataka, I certainly think the people today are wiser than we give credit for. Certainly journalists don't give them that much credit, but we are very, very confident about people. And I certainly think the mandate will be for continuity, continuing this kind of development focus and law and order and peace and stability and the double engine Sarkar magic in Karnataka, as the people of Gujarat have shown, Nagaland have shown, Tripura have shown, and Meghalaya have shown.
So can we expect a number on the seats also from you?
It's 224. 224 is the size of the legislature. I'll certainly predict that it's going to be more than 112.
Okay, all right. So that, you've given us a headline and a great one to go with.
On that note, thank you very much,
Thank
sir.
you.
A lot of insights on fintech, on Karnataka, and on legislation. A big round of applause. Thank you very much.
Right, that was a wonderful and an insightful conversation, guys. I would now like to invite Binoy to present a small token of appreciation to the minister, who also happens to be an avid reader. We hope he doesn't have this one in his collection. Thank you, sir, and thank you, Binoy. Well, you heard from the government. It's now time to hear from the regulator, Mr. Ajay Kumar Chaudhary, who is the Executive Director, Reserve Bank of India, holding the portfolio of Fintech Department, Risk Monitoring Department, and the Inspection Department. He's responsible for the implementation of Central Bank Digital Currency, approach towards crypto assets, potential regulatory guardrails relating to fintechs and techfin, regulatory sandbox operations, RBI Innovation Hub, and all the related areas on fintech, including sustainable finance. He also looks after internal governance in Reserve Bank of India relating to risk monitoring and internal inspection as second and third lines of defense. Please put your hands together for Mr. Ajay Kumar Chaudhary, who will be there.
Thank you, Nikki. Good afternoon to everyone and happy Holi. Honorable Minister who has just left, Binoy, Dinesh, and distinguished guests from fintech, financial institution, industry. press and media, ladies and gentlemen. The theme of my today's address, and immediately going to be followed by one fireside chat, what I understand, is fintech innovation and regulation, a fine balance. The underlying thing is the fine balance. I am honored to be invited to deliver this address and would like to express my sincere appreciation to this invitation to speak on this topic, which is quite relevant in the current scenario. We are gathered here to sense, assess, and celebrate the role of fintech in developing sustainable fintech ecosystem and contribute towards a sound financial world. As I often speak, sustainability in any sphere is about balancing the needs of future against the wants of today. I'll underline, balancing the needs of future against the wants of today. Sustainability of financial system in this sense is no different. A wise man said, extremes are easy, strive for the balance. My address will be focused on looking closely at the ingredients of this required balance. The balance that can help the fintech sector in scaling the height consistently and sustainably. To start with, let me first put across the quote as a precursor from the Douglas B. Reeves, the American author. He said, quote, sustainable change, after all, depends not upon compliance with external mandates or blind adherence to regulation, but rather upon the pursuit of the greater good. Please hold on to this thought, as this is the essence of what I'm going to share with all of you, this learned audience. As you would appreciate, the current financial system has been built with years of painstaking efforts and has evolved over the years by taking into its fold multitude of innovations along the way. You would also appreciate that while all segments of the economy are important, financial sector is special, as it deals with public money and entails high degree of trust. Therefore, this segment, by being special, requires special attention so that vulnerability, if any, are managed in time and managed adequately. Therefore, focus on the innovation in the financial sector and the regulation of it is not new. However, recent strides made by fintechs have certainly renewed this focus, as it is because this fintech revolution is not about new tech improving the processes or customer experiences alone, but also, more importantly, about new trends and new products and services. The fintech-driven innovations, what has created many new products and services, and these are of both the kinds, the one which excites us together, as also as regulators, and the ones that are alerting all of us of the challenges in dealing with them. Few such innovations in financial sector include mobile payment, peer-to-peer lending, private currencies, crowdfunding, robo-advisories, etc., and etc. Many of these products and services have indeed offered greater convenience, efficiency, and accessibility to customers. However, these innovations have come with their own set of risks, a few of which I would like to touch upon. I will touch upon 4 to 5 risks only. There are many, but the 5 important which I consider important. The first important thing is the customer protection. This risk is perhaps the most critical one as far as fintechs are concerned. Be it plain fraud or misconduct, imprudent lending, or even lack of appropriate disclosure and transparency. Risk of loss to consumer is often quite high. In fact, our experience in digital lending space has been quite concerning. But beyond this, even the risk of loss to consumer due to tech unreliability or vulnerability of their system, as well as due to business failures, may be quite significant if it goes unchecked. The second risk I'll touch upon, or concerns I'll touch upon, about the data privacy and security. The newer products or services being rolled out by fintechs are primarily built on the use of data. Fintechs tend to leverage on vast troves of sensitive financial as well as personal information as part of their business models, making them exposed to data privacy and security breaches. These breaches can lead to consumers facing more inconvenience to significant financial and social losses. Third part, I'll talk about the integrity of the financial sector. This is sacrosanct, as this is well appreciated and understood by all. Fintech entity and products, due to their novelty, reach and current regulatory coverage, because at this point of time there is arbitrage between the traditional system and the fintech, may become vulnerable to abuse by criminals and bad actors, which also raise concerns relating to money laundering and terrorist financing. And next, I'll talk about the stability of the financial sector. Our minister has touched about, and questions were asked about the big techs. Fintechs, including the big techs, can disrupt traditional financial system in many ways. The concentration risk, market dominance, competition, predatory pricing, ability to scale rapidly are generally cited as elements of risk associated with big techs. These interconnectedness with traditional financial system and consequent failures may possibly impact the stability of the financial system. Hence, regulators need to keep a watchful eye on the developments that may contribute to build-up of any systemic risk from the fintechs as well as big techs. And last, I'll touch upon the risk of the model, which often brings the question of fair treatment and anti-discrimination in the extension of credit. It is necessary that highly automated fintech business model for decision-making take care of requirement of fairness through additional procedures, controls, and safeguards, both in the development and deployment of model and also in the final decision-making. You must be conscious that these models, whatever are built for decision underwriting in case of lending part, is based on limited data points. It is not covering the entire business cycles. And definitely it creates the limitations in the outcome of the models that can possibly bring the some sort of a limitation by way of creating the unfairness actually in their decisions. Let me now touch upon how we are going about as a regulator in achieving this required fine balance, because our theme is the balance. One of the ways we address it by introducing the regulatory sandbox framework in 2019. Regulatory sandboxes allow fintechs to test their new products and services in a controlled environment with calibrated regulatory requirement as necessary and acceptable to all stakeholders. This allows for fostering innovation while also ensuring that consumers and systems remain protected. Another approach we have taken is to carve out a new set of financial intermediaries under a new regulatory regime. Payment aggregator, account aggregator are few such examples. Other approach has been building a regulatory framework around a new product whereby significant risk has been eliminated through regulatory design. Regulation of peer-to-peer lending is one example, where we have prohibited undertaking of credit risk by the platform themselves. Since 2021, we have taken further more initiative to foster innovation. One of them is creating our own domestic innovation hub that we call Reserve Innovation Hub located at Bangalore. We have also started global hackathon in the Harbinger series. While the RBI has already started to make it mark by taking up a few key projects and initiatives, we have launched the second hackathon that we call Harbinger 2023, after successful completion of the first one, that is Harbinger 2021. It is always a challenge for the regulator to strike a balance between fostering innovation and managing risk. This also needs to be seen in the context of timing of introducing the regulation and the extent to which to regulate. The timing of bringing the regulation and extent to which it to be regulated. It is said that if regulation is introduced too early, innovations do not flourish. And if it is brought in very late, there is the element of risk materializing, leading to many negative consequences. Similarly, if regulations are extremely light touch, it often fails in its objective, and if it is too onerous, the beneficial aspect of innovation do not get harnessed if you would have carefully noticed. Our regulations generally had intention to remain inherently balanced. Through our regulatory and supervisory efforts, we have tried to prevent regulatory arbitrage across different regulatory regimes. We have also attempted to bring regulation only when required and only to the extent it is needed, so as not to stifle the innovations. Having said all this, I firmly believe that true balance between innovation and regulation will not come from now how a regulator approaches regulation. It is desirable that this comes from within the fintech. I'll again repeat, it is desirable that this balance should come from within the fintechs. If fintechs and their innovations are responsible, it will intrinsically reduce the need for regulation. And for fintechs to achieve the same, I believe the need to focus only two things, that is customer centricity and the governance. Let me dwell a little on these two aspects. If a fintech is a customer-centric, its products or services should avoid loss to customer in any form. As indicated earlier, loss can come due to fraud or misconduct, due to insufficient disclosure and transparency, or even due to business failure of fintechs. It can also come due to conflict of interest between customers and fintechs. This is very critical. This is where fintechs as facilitator need to be truly customer-centric, that is, go beyond convenience and user experience and not missell any product or services just for a fee. Further, loss to customer can also come from lack of sophistication or inexperience of customers themselves. Therefore, the product or service design itself should cover for each of these aspects, such as product suitability. Even a simple aspect of using user interface being designed poorly may hamper customer comprehension. At times, the design itself may be intended to exploit behavior biases by concealing of or under-emphasizing the risk and cost. These things must be avoided by fintechs with true focus on customer interest. Now, on the second aspect, the governance, which is the glue. Good governance system and practices are essential for the sustainable growth of a fintech and for them to being customer-centric. The value of accountability, fairness, transparency, and independence in the processes and people within the organization cannot be overemphasized. The role of board in putting in place a good governance framework and value system is critical, as in such matters, it is the tone from the top what is most important. While concluding, I'd like to say that fintech innovation and regulation go hand in hand. While as a regulation, we are tirelessly and incrementally working towards a regulatory framework that provides a supportive environment for fintechs and at the same time maintain financial stability and protect the customer. I urge fintechs to adhere to the principle of customer centricity and to adopt and follow good governance standard in its true spirit voluntarily. Only through these collective efforts will achieve the true balance and contribute meaningful to the entire ecosystem of the fintechs. I wish this conclave a great success. Thank you.
Good evening, everyone. Sir, it's a pleasure to have you here. Most of us know Mr. Chowdhury is one of the key persons at the central bank who's been driving the process to regulate fintech industry. He is also a veteran who has worked across currency, operations, supervision, etc. over 30 years. Thank you for your time here. I just want to pick up some points. I think it's a little over a year since the RBI set up the new fintech department. It was in January 2022. And that's the time when you also took charge as the executive director. So how has been the experience? What's the most challenging part of last year?
Thank you, Dinesh. As I was mentioning about the multiple initiatives taken by regulator, means RBI, to achieve the balance between the innovations and the stability. And one of the, a few of the items what I highlighted is the creating the hackathon series and RBI Innovation Hub. But what I didn't mention, that a department, especially specific to the fintech sector, that was created on 4th of January of 2022, with the specific intention by our governor to foster the innovation while ensuring that stability is not compromised. I must share with you, it's 1 year, 2 months of childhood, actually what we have spent, and it's a wonderful experience because multiple things actually we are handling. One is entire fintech ecosystem, how it is growing exponentially, not in India, globally, and how to handle this and how to develop a framework to ensure that they continue to foster innovation without compromising the stability. Second, you all must have seen and heard about the CBDC. So that CBDC we have conceptualized, ideated, and now gone for the pilot also, and with the in a closed user group with the support of few banks, including the bank IDFC, Vedya is sitting here. And we also run this regulatory sandboxes, hackathon, and creating some sort of a framework, actually, for future ecosystem of the fintech so that they can continue to foster innovation without diluting the stability part.
So there is a view in the fintech community as we interact with most of the stakeholders that the RBI has been, reluctant in terms of giving a, freedom to fintechs to grow. On one hand, you say that the fintechs need to innovate, but there is a view that as the regulator, you have been slightly, reluctant. You clearly don't want them to get into lending. You don't want fintechs to grow big. So how does the RBI position fintechs? What do you want them to be?
When we talk about a fintech or any tech, this idea is this: to use the tech to improve the efficiency of the finances or that system. When we talk about RegTech, SupTech, FinTech, it's basically tech we are using to improve the efficiency. In case of Fin, is a financial system and services. That particular part, improving the efficiency part, is perfectly fine and welcome. But so if it compromises in any way the stability part, and if compromises on any of the policy objective, I'll underline here again, the policy objective of financial integrity, policy objective of data privacy, policy objective of customer and business conduct, policy objective of cyber security, if any of these objectives are compromised, then regulators have to chip in. At this point of time, fintechs are not regulated.
Correct.
Right.
So
we are working on the framework how to handle that. We are not talking about regulation. We are talking about a framework which can handle this particular entire ecosystem.
So when will we see a clear framework in terms of regulation? Will we see that in the first half of this year, or?
No, we are working, committee has informed they are going to give the report. Based on that, RBI will take a view and decide how we have to take it forward.
So is it fair to expect that we will have a clear framework for fintech regulation this year? Is that a fair expectation?
Again, I'll underline that it's not a regulation. We are talking about the framework which will basically give the direction or vision how to handle this ecosystem so that it does not compromise the stability.
Yeah. So one related question is about the digital lending apps. Recently, the RBI had collated a list and sent to the government. Subsequently, many apps were banned. So I understand you are in the process of collating another list. Is that correct? Yeah?
No comment on that, because if anything is suggested by the committee and if it is accepted by RBI, and then if any legislative changes are required, then possibly we can approach for the changes. But at this point in time, nothing is in store.
But how do you see, we understand about the banning of illegal apps. We already have the precedent for that. The RBI is working with the government. But does the Reserve Bank of India has the bandwidth to regulate the illegal lending apps? Because there are so many across, most of them working from outside. How do you regulate?
This is something very, very serious issue. At this point of time, when we are talking about the legal apps or illegal apps, whether any one of them are regulated, if they are not part of the regulated entity, that is the big question. Because if apps created by banks, if apps created by NBFC, that can come under Reserve Bank of India. If apps are not created by them, is something independent entity which are not regulated, they are not regulated. And in any case, none of those non-regulated entities are supposed to do the lendings, etc. and more than 1,100 apps, I believe, more than 80 stores they are at this point of time available. Many of them possibly might not be part of the NBFC or banks apps ecosystem. That enforcement is required, and if required to be banned, they need to be banned if they are compromising any of the policy objective what I mentioned earlier.
See, in October last year, the Reserve Bank had a discussion paper which highlighted something which you touched upon in your remarks earlier about the threats posed by the big techs in the payment system, once they become the front end. We have the MNCs coming in a big way, garnering a big market share and dominating the payment system. So I understand the Reserve Bank of India doesn't really favor one party to dominate a larger share, but what can you do about it in terms of big techs dominating the payments?
I think this question, similar question was asked from the minister also, and he had responded. But as a regulator, I'll just touch upon this.
Yeah.
Obviously, as I mentioned, that use of technology by any big tech industry entity, if they are bringing in the financial system and they are bringing efficiency, obviously they are welcome, actually. That is a very welcome step. But the risk posed by the fintech startups and risk posed by the big techs are two different things. Okay. Risk posed by the big techs, if you look at, is relating to the concentration, is relating to ability to scale up significantly and bringing the things more systemic, ability for dominance, predatory pricing, all those things are possible through big tech because of their business models. And therefore, globally, it's not India, basically everybody is grappling with how to manage those risks without curbing the innovation and without restricting their access. We are also trying to have some balance. You are aware that we have outsourcing guidelines for the payment system and settlement system, as well as we have the guidelines for payment aggregator and payment gateway. Also, we have draft guidelines we have come out actually on the outsourcing for the information technology and information technology service providers. Right. So all those things basically will be helpful in that direction.
All right. The CBDC pilot is currently on, which is something, which is seen as the next big revolution in terms of the way we handle money. Of late, you have mentioned about, first of all, I want to know that what is the learning of the Reserve Bank of India from the pilot so far? There are concerns about anonymity of the transactions. There are concerns about frauds, fraudulent transactions happening when you deal in e-rupee. So what is the learning so far from the pilot, CBDC pilot?
I'll just give you some background. 2 minutes I will take.
Yeah.
The pilot of the wholesale segment, because the CBDC we have started pilot on wholesale and retail segment. The wholesale segment we started on 1st of November of 2022 and retail on 1st of December of 2022. Use cases were different. For wholesale segment, it was secondary market government transactions settled in the CBDC, and for the retail, it was a P2P and P2M. Apart from some initial teething troubles, actually, the pilots are going very, very smoothly. The many paper and many news channels, actually, we saw that the pilot is not successful because it is not scaling up. But I must mention it, target is not to scale up at this point of time. It is a pilot. And it is to be a retail part, we are looking at the closed user group. At this point of time, it is around 90,000 customers and around 9,000 merchants. Basically, they are part of the closed user groups. We are targeting to scale up to 500,000 by June or July of this year. So that is the overall position of this. We are going to test multiple tech architecture. We are going to test multiple design features. We are going to test multiple use cases, including the offline programmability, cross-border, etc., and etc. And we are not in a hurry to implement it. Once we are very comfortable and confident about all aspects, including the cybersecurity and tech architecture, then only we are going to roll out at the population level.
Mr. Chaudhary, in one related question, recently you said you want more private sector and fintech participation in CBDC. So how do you Could you throw some light on what is the thinking right now?
Because I mentioned about that, what is the motivation to bring the CBDC here? We have one of the best payment system actually in the world. And why we want to have the CBDC? CBDC is a currency. It is not a payment system. If you want to compare it, you compare it with the physical currency, and this has multiple advantages because it has characteristics of all physical currency features apart from convenience of being digital, right? 24/7 you can use it. Additionally, multiple use cases I talked about, cross-border, we talked about offline, we talked about programmability. Possibly, we are also looking at this through wholesale, the settlement efficiency, etc. But once the private sector starts finding use cases, more use cases for CBDC, that will be something where the flip will come and accordingly it will take the escape velocity and will be basically can be launched at the population level. You know even our UPI also. It has taken the flip actually during the COVID, and now actually is the way it is going, it's well appreciated. And this is a digital payment week, what we are celebrating actually entire week actually for this. So we are expecting that possibly next few years, CBDC will continue to be here. It will test it for all use cases, and all private sectors are welcome to support and provide the use cases, and accordingly we'll work on that.
What is the central bank's thinking in terms of FLDG at this point, the first loss default guarantee? You know, the industry seems to be pitching for this as a way to raise funds, more partnerships and innovation. But clearly, RBI doesn't want the fintechs to take part of the default. They are not favoring the FLDG. Is there a rethinking on the risks and rewards on FLDG?
Difficult question. FLDG, it is what? It is a credit enhancement, right? And credit enhancement we have allowed for all securitization transactions. But credit enhancement is not allowed actually on the direct assignments, right? And this is a direct assignment, basically what we are talking about. And here basically we have compared it and actually found at par with the synthetic securitization, and accordingly we told it is not allowed, right? That is the way possibly we look at it. Idea is this, that who is doing the underwriting under the FLDG? If third party under FLDG is there, who is underwriting? It's not bank and NBFC. Banks and NBFCs are depending on the, say Amazon is there, they are giving some scores, fintech is in between, they are giving some scores, and based on that basically ultimately banks and NBFCs are lending on it, right? So it's a complete opaque system and non-transparent system, and they are non-regulated. They are not regulated by any one of us. So these are the concerns, and if it is scaled up, then system-wide risk actually if it is going to pose, that is something which we all are concerned about. So therefore, it's very clear if our regulated entity is involved, it is securitization, credit enhancement is possible. If it is not regulated entity, if it is not securitization, credit enhancement is, at this point of time, we consider it is opaque, non-transparent, and avoidable.
Thank you. On crypto, I can't remember an issue, at least in the last 10, 15 years, when the central bank has openly come out calling for a ban of something. So RBI clearly, including the governor and the deputy governor, has called for the ban of crypto assets in India. But till now, we don't have any clarity in terms of any national regulation for whatever reasons. Is RBI a bit disappointed because of the lack of clarity in terms of national law for crypto?
No, I think there is a lot of clarity from RBI side. Our governor has spoken on cryptos. Our deputy governor has spoken on cryptos. We have tried to do a lot of research on the private currency, exactly what it is. We fail to understand what it is. I'm sorry to, if anybody differs from my point of view. We don't understand whether it's currency, it is not meeting any of the characteristics of currency. We are looking at whether it is commodity, it is not fitting into any of the characteristics of commodity. We are looking at financial asset, no, it is not asset because it is no one's liabilities. So ultimately what it is, right? And how to regulate. So 1 year before or 1.5 years before, globally, nobody was listening to us. But now entire globe has gravitated towards India's views that there is risk, there are concerns on the private currency, and we need to handle it. G20 presidency under India presidency, this is also one of the major discussion point, and it was clearly articulated, if you must have heard, that it needs to be discussed among all the major countries, and accordingly, if required, it needs to be regulated, and if possible, if regulation is not possible, we also can think of banning it. So these are the issues basically we are concerned about, and so far, I think our governor articulated 1.5 years back, and I have not found a single article where they could contradict any single point of any one of the points actually pointed out by our governor and deputy governor on that. So that is, our point of view is very clear. As far as India's stand is concerned, that we cannot comment, right? That basically ultimately government of India has to take a view.
We are coming to the end of the conversation. I just have one more question. That's about what do you really do with the fake messages? Of late, there have been so many online frauds in banking transactions. We recently saw a report last week that almost 40 people of a single private bank were duped. They were given a fake link which asked for an OTP. So many people entered that, lost money. I know RBI has been cautioning it since 2015. There is nothing new in this instance, but of late it seems to be there is a rise in such instances. What is the thinking within the Reserve Bank of India? How to handle?
No, it definitely is a big concern, and it requires a lot of concerted effort from all stakeholders, as well as possibly a lot of education on the part of customers. That is I find many times even very educated people also now caught actually in such type of frauds. So multiple fake identity, you say account manipulation, then spoofing, then phishing, and all those things are happening nowadays, and these are the areas of concerns. And RBI basically, if you say multiple initiatives have been taken actually, educating the people to be aware about this issues relating to the fraud and online frauds, etc. And we believe that with a lot of education and concerted effort by all stakeholders, we can tackle it. And obviously data privacy law, as Minister has mentioned, as and when it comes, actually, possibly it will further help in this direction.
Thank you so much for your time for that, for those insightful comments. Thank you so much.
Right, a huge round of applause for the rather amazing session that gave us a view of fintech from an RBI lens. But now I'd like to invite Binoy to present a small token of appreciation to Mr. Chaudhary, who has an ardent interest in all things tech. Right, with that, now we turn focus to the first of the founder firesides. We've lined up for you. Zerodha needs no introduction. It is one of India's most unique startups. It hasn't raised a penny in funding, is profitable, and the founders still own a significant percentage in the company. Apart from Nitin Kamath, who is the CEO, and Nikhil Kamath, who is the Chief Investment Officer, a person who is core to Zerodha is Dr. Kailash Nath. He's helped build and scale a complex financial and stockbroking stack from the ground up. Please welcome Nitin Kamath and Kailash Nath to share the bits to billion journey with Moneycontrol Srikanth.
Good evening, everyone. Thank you very much, Nitin and Kailash, for coming all the way from Bengaluru. Thankfully, Nitin didn't know it was Holi today in Mumbai. He was planning to chill in Bangalore, but he realized it's Holi after coming here. So small mercies.
No, I got to know yesterday that today is Holi and it was too late.
Yeah. So thank you very much again for coming on Moneycontrol's India Fintech Conclave. And as Nikki mentioned, zero is the favorite word at Zerodha. Zero funding, zero debt, zero loss. But how long did it sort of take for you to become profitable, Nitin? And was that always the way you wanted to build a company?
Yeah. No. Firstly, thanks for having us here. Both Kailash and I, first thing we noticed were there were glass bottles. So, thanks for whoever thought of having glass bottles instead of plastic. So, see, when we started the business, there was no big ambitions. We were really thinking building Zerodha as an extension to what we were doing, Nikhil and I as traders back then. And Nikhil continued trading. I thought, I have an opportunity to go build a broking business, and that's how the business started. Actually, the first year of the business was profitable because of Nikhil's trading. In the sense, his trading profits was, in a way, a seed capital for the first 1 or 2 years. But the business became, profitable from operations of sorts. I think from the 3rd year onwards. And so I think, see, in the journey, I think the reason we are profitable is because we have never spent money acquiring a user, right? And this was a concept, I think, as a trader, I knew this very well, that looking at an advertisement doesn't get you to trade, right? The trigger to get you to trade is more, more peer induced. I'm trading, I make some money, I tell my friend, oh, I traded. He asked me, where did I trade? I let him know, right? As in, it was more pure induced. And so we said, so spending for advertising didn't make sense. And especially at the low cost at which we were working, if you spend 3, 4, 5,000 rupees acquiring a user, there was absolutely no clarity on how you ever, kind of recover that money. So the stance of not advertising is really what has helped us stay profitable, and which has also meant that it has made it almost like for us, forced upon us that you have to constantly keep doing something different. Because if you want the word of mouth to continue happening, you need to keep doing something different as a business. So that's really how the business has evolved.
At what point did you think that Zerodha is here to stay? The aha moment when you thought you were on to something, that this is not going to fail and I don't have to quit my startup.
Yeah.
Kailash?
Yeah.
How is Kailash?
No, in the sense, until 2015, we were building on top of vendor products, right? 2015 is when we launched Kite, our in-house web and mobile app. And so when we saw that, when we saw the reception the customers gave, was the aha moment of sorts, and that was really when I thought, there's an opportunity to go kind of, potential for us to become large as a business. I think we both were, on our way to Cochin for one press conference in December of 2015, and we decided, at the airport, I said we haven't done anything special. People don't look at Zerodha for investing; they look at us only for trading. Why don't we go zero brokerage for equity investing? It took us 2 minutes to decide this, and the next day we announced. So we were kind of at the right place, right time, bunch of times. But the rightest place was 2015, 2016 for 3 reasons. Kite was launched, we went zero brokerage, and then in 2016 you could start onboarding a customer online, completely digitally. So all those 3 things came together, and that was really, I think 2016 was really the aha moment.
The aha moment, yeah. Nitin, I heard something that you said recently, I think at another event, that in the early days of Zerodha, you used to do a lot of telecalling. And so Nitin had a different telecalling name for himself, which was Sachin or something. Tell us about that.
So I worked in a call center for 3 years, between 3.5 years, between 2001 to 2005. It was one of those US call centers. I used to call myself Nathan Hawk, because this was really when Mission Impossible had launched. And I kind of found a lot of power behind a pseudonym, because on a phone, it just is more powerful. And I've always been a sales guy, in the sense I've always liked selling. I've sold a bunch of things through my life. So when we first started Zerodha, you can't be the CEO of a company cold calling, right? I mean, so yeah, so I started talking to customers as Sachin, and yeah, the first 1 year, I think the first 3,000 or 4,000 customers, I must have spoken to 2,500, 3,000. I mean, 90% of them actually. So.
Wow. Kailash, you've sort of built the tech stack for Zerodha, and I remember the last time we spoke, you said you have 33 members in your tech team, and only 2 of them have left in a decade. So what do you do to retain talent? Because people have had to give all kinds of financial incentives and other incentives to attract and retain talent. What did you do differently?
There's no formula, and I think the key is that we don't really look at people as resources or talent. We don't even use the word talent. That's not our framework. So it's a group of people who hang out with each other, who have the right philosophies, who gel well with each other. There's no pretense. So it's human decency, I guess, and a clear focus on building relationships. There's really no formula.
But, you know, as you scale, is it possible to have that framework, just a bunch of people mingling with each other? Because if I look at Zerodha today, you operate at a different scale, right? I mean, for FY22, some 4,964 crore of revenue, 2,000 crore of profits, and you still have 1,100 employees and 33 in your tech team. So how is it possible to have that when you're scaling so fast as a company?
I think it's a misconception that the number of people in a tech or engineering team scales linearly with the organization in terms of financial transaction or the number of users or revenue. It's absolutely possible for a really small team to build massive systems that scale to really massive numbers. So it's generally a misconception. For me, if an engineering team grows exponentially as the company and its business grows, that is a bit of an anomaly.
Okay. And, you know, any founding principles that you had while building the tech stack that sort of continue till today?
Yeah, absolutely. Keeping things really simple and having the conviction to avoid FOMO. I think a lot of organizations end up building way too many things, chasing short-term growth, short-term metrics. We've always had a simple and singular conviction of building things that are meaningful to our customers. So we've never really rushed to release new features or build new features arbitrarily. In fact, we discuss and shoot down most things internally. So it's just keeping things simple and only always building for first principles and truly owning a technology stack. So one thing that I'm really pleased about is the fact that we only have really small external dependencies and everything is housed and owned in-house. We understand our technology stack really well to take it any way forward. And that also gives us immense regulatory agility. So it's just common sense first principles and the conviction to not fall prey to FOMO or shiny trends in technology.
But Nitin, do you worry whenever you see Zerodha down trending on Twitter? Do you call Kailash? Kailash, what are you doing?
No, I mean, thankfully, what happened in 2017-18 is the first time we scaled really quickly. And stockbroking is, now that last 5-6 years I've interacted with founders from across different industries, I think it's one of the most complex pieces of technology because of all the dependencies that you have across exchanges, depositories, lease lines, etc. So a lot of issues that we faced in 2017-18 was mostly with a certain dependency of that we had on, which didn't scale as well as we thought it will. And but over the last 2-3 years, it's not really been an issue. But that said, see, there's no tech that can't be down, and so we do have small little issues once in a while. And now I've stopped reacting to those trending and all the emails that land in my inbox, every time there's a, like, oh, chart's not working, like, cheat, con, fraud, Nitin, so I'm like, dude, so it stopped affecting me. I think if it affected me, as much as it did many years back, I don't think we would have survived, so.
Right, one of the lenses that VCs use to invest is market size. And I think you stirred a hornet's nest when you spoke about the actual size of fintech in India. I think you said 10 to 15 crore users. Do you still stand by that? Don't you think there is a larger addressable market, considering we have all types of apps servicing all different segments of society?
I mean, I probably overestimated.
Okay, even that is...
No, I mean, see, the thing is, fintech are two things, right? One is all the investing and savings app, right? So you're kind of building it for people who have the money. And then there is lending, which is you're building for everyone who don't have the money. And the ones who don't have the money, I mean, you have a large population, right? I mean, that's probably larger than 15 crores. But are they lendable? I don't know, right? So, but the ones who have the money, you have to assume that it's kind of a subset of people who make at least 30, 40,000 rupees a month, right? As in, it's very hard to figure how a family, a household, which makes less than 30 or 40,000 rupees can actually, you know, how much can they really have at the end of the month to be able to save, invest? Of course, you can build an app, and even if are they even monetizable is a question, right? I mean, if you are spending, say, 2,000, 3,000 rupees acquiring this user, and if they're doing 100 rupee SIP, you'll take forever to even recover anything, you know? So I think the real problem to solve for the country, you know, and it's very exciting to know what the government's doing in terms of pushing for entrepreneurship. And you know, the reason I think we guys are still excited with what we do at Zerodha is because we think if Indians understood more about risk-taking, there'll be more entrepreneurs, there'll be more capital available for entrepreneurship. Because eventually if India has to go up the per capita ladder, you know, I mean, I think it has to come through entrepreneurship. And we kind of believe that what we're doing at Zerodha in some way is probably helping it in some form. You know, so.
Right. Kailash, you know, we heard the minister talk about a bunch of regulations that are coming. The RBI executive director made a very interesting point. He said the onus is on fintechs to ensure that they build responsible products. How do you sort of build products in anticipation of regulation? Because Nitin often likes to say that I'm, you know, one SEBI circular away from perhaps losing half of my business. I mean, that's his favorite line. But how do you sort of build in anticipation of regulation that, you know, you don't fall on the regulator's bad side?
I'd like to think that, no, I know that our approach is really conservative. We've grown in scale as a business, as a technology company, as a financial services company, but our approaches have largely been very conservative and rooted in the principles of potential regulation. So many a times when crazy regulations have just appeared overnight, where we've been forced to completely change our systems and business processes, we've been able to because we always end up imbibing that potentiality in our business processes and in our technology. So I would say it's really, it's an integral part of a product development philosophy. We don't really see it as a business feature or a financial offering or a technology solution. It's also in equal parts a regulatory solution also. So I guess over the last decade, it's really become cultural to us that whatever we build, whatever we envision, there's a huge regulatory/risk perspective that we apply. So I guess if you do that enough, over time, you kind of get good at it. And you kind of get good at predicting what can be changed, what can go wrong. And not doing dodgy stuff and keeping things really simple, you know, helps.
So no move fast, fail fast,
no,
break things.
definitely not.
No,
yeah.
also I keep saying this. I think for all of these regulated businesses, having a regulatory foresight is like super important as well. Like, you know, one of the things that we kept discussing about was, you know, this whole digital gold, you know, and it never felt right because of the way it was structured. And we knew that one day, you know, we'll get up and maybe SEBI will say, you know, you can't offer digital gold. So, you know, just because it didn't make sense, we never took the effort of doing this. And one day, SEBI did get up one day and said, you know, it didn't. So I think if you have to kind of work with the spirit of regulation and not really explicit regulations. And that staying in spirit of regulation is also probably one of those, you know, me being fearful of regulation so much is not just outside, even within internally, you know, I'm constantly saying, you know, we're just one regulation away, you know, from getting, you know, like, so everyone in the business is, you know, is focused on what are the regulatory changes. You know, Kailash has built like a internal utility for us, you know, where all the circulars get listed every day, and, you know, we are a bunch of us, we are looking and seeing what's the impact of this. And
maybe we can get access to that, you know, easy to keep up.
I'm sure he'll open source it, you know, so.
Right. Final couple of questions. Since you've often described Kailash as your guru, or Dr. K as you call him. Why is that? In what ways has he influenced you?
Yeah, no, I mean, so the thing is, see, I'm a trader. Like, I started my business, I mean, not even business, I started my career as a trader wanting to make X amount of money and all my material goals. When I started business, I came from the same school of thought, which thought that throwing people at problems solves problems, right? And I thought, you should grow at all cost, right? I mean, some of these philosophies change as and when, I spend more time with K, so, so we were 1,100 people on our team in 2017 when we were less than 1 million customers. We are 1,100 people on the team today with 11 million customers, right? So now every time we are looking at hiring, I'm questioning, do we really need this person, right? Because I've now come to believe, like how Kay says that, I think, people complicate problems, they hardly ever solve, I mean, it's not, more people don't really, make it easier for you. We have used everything possible technologically, internally to, leverage and become more efficient as a business. And as we grew the business, there was success, right? As in, it's very easy for the success to go to your head, and but I think having him around has kept it very grounded. And then we are like, what is, even success brings obligation, and what do we do about it? I mean, these are all questions maybe I would have asked myself, but having him around has been, like a Guruji, who is.
Clearly, it's not easy to get a job offer from Kailash. No?
I think it's because we color coordinate our attire. And this wasn't planned. This is just a coincidence.
Finally, Nitin, your entire business is based on people trading stocks. Will Zerodha ever do an IPO?
Yeah, I mean, it's, I've said this before, it's kind of borderline hypocritical if the largest broker in the country says, I won't list on the exchange and create wealth for, people when we are asking everyone else to do this. No, the problem for the business, like I said, we are just one regulation away from a large hit to the business.
You're like that topper in school who always says, I've done my exams badly, and then comes on top of the topper list.
No, it is. I mean, you won't even believe the kind of regulatory risk our business has. A lot of our revenue comes from, firstly, based on the market action, right? As in, which is absolutely out of your control. If you were to ask me, Nitin, what will you do next quarter? I have zero idea. Zero clue in terms of user growth, trading volume. I have nothing. If you ask me trading volume and user growth, I'll say, can you tell me what Nifty will do? I'll tell you, right? It's really as clueless. And I don't think we can afford to get the retail, who are the lowest in the food cycle in terms of the risk-taking ability, to be investing into a business when there is no little predictability in the business. Like, while wealth creation has to happen in the market, but I think it has to happen with lower amounts of risk for retail investors. So I don't think we are still ready. I mean, we hope that one of these years we get up and we have built enough different things to do as a business where the dependency on the capital markets is not as much. And then, we can, we would want to come there, list and, hopefully create some wealth as well. But I don't know when that will happen, to be very honest.
Right. On that note, thank you very much, Nitin and Kailash.
Thanks.
Right, a big round of applause. We hope more startups adopt the Zerodha playbook. Chandra, I request you to please stay back on the stage. Moving on from one unique entrepreneur journey to another. He was a star banker and a board member of ICICI Bank before he decided to give it up for starting up in 40s. Today, he is a promoter banker who runs a hugely successful bank that is funding the dreams of millions of individuals and enterprises. Please put your hands together for V. Vedhanathan, the Managing Director and CEO of IDFC Capital First.
From one founder journey to another entrepreneurial journey, thank you very much, Mr. Vaidyanathan, for coming on Moneycontrol's India Fintech Conclave. I'm sure you're the sort of source of envy for many fintechs, because IDFC First is a fintech with a banking license, the desired end state for many entrepreneurs. So how did you get there? If you have to give a mantra or some advice for fintechs who want to get there, what would you say?
Really, I object to the way she introduced me there, promoter, banker, and all that. I really am not all these things. I actually, the whole story on Capital First was maybe a while ago. And of course, I had a significant stake in Capital First. But, for all first-generation entrepreneurs, except Nikhil, whom we saw just now, they dilute and dilute as you raise capital. So I don't want to give any of those tags to myself, not even entrepreneurship and all that. But I can say that it all started, at least in my case, thinking that the banking system as such is just giving home loans and car loans. If you see the loan book of most banks, it's car loans and home loans, the majority of it. Really, I don't find much intellectual property in it. It is like if you have money at maybe 6%, you can lend it at 8% or 9%. You make a reasonable buck, and it's pretty safe and all that. But it doesn't really open up the segment. There are no new technologies going into it in any massive way. You don't explore a blue ocean, and you don't really create value as much as you can create in blue ocean. So that is the way I started. But of course, a lot of good things happened along the way. Let me leave it at that.
Right. This session is about reimagining banking in the digital era. As the MD and CEO of a bank today, what's your take on the impact that technology is going to have on banking? Because ultimately, every company is going to become a technology company. How much time do you spend on thinking about technology? If you can give us some perspective on that.
It's a very, see the word, since you said what's the role technology will play, let me just say that technology is such a large waterfront. There is 5G, there is IoT, there is AI, ML, there is conversational AI, the hyper-personalization. So just such a large waterfront, it's really difficult to put started. Maybe we'll go in bits and pieces as it goes along. But let me just step back from that. If you think of banking, it's not a product as such. It's not like a mobile phone, it's not a wallet. It's not a product. We call it product, but it's not a product actually. It's not a physical product. It's a service. But even in service, it's not a physical service, like somebody giving you a physiotherapy for a repairing, or a surgeon who's doing, that's also service, but somebody's doing something on you physically. Now, this is service like purely it can take the shape of electronification. That's a very, very important point to note. If you think of savings, for example, you're saving money, money is electronic. You want to invest money, that's electronic. Your demat is electronic, and a choice of mutual funds are electronic. You want to take insurance. Now, insurance is a concept. Die, somebody pays for you, but it's all electronic. If you think of payments, it's all electronic. So, unlike any other form of product or service, banking is very prone or to be affected by technology, because it's all electronic. It just moves by electrons. So it's like that. Right. So that's the reason why banking system can immensely latch on to the new emerging ecosystems and plug there and get the move faster with the times.
Right. In fact, since you spoke about ecosystems, let's discuss how these ecosystems have changed in terms of the origination ecosystem, the processing ecosystem. How are you sort of going to leverage that?
Let's take one thing at a time again. Since we said banking is electronic, for the reason I described, it's very touch-free. Let me just say that, let's take origination. So all of us who've been a few years in this industry, we know that just not very long ago, there used to be direct marketing associates who used to go to customers' homes and pick up documentation for giving a loan or so on. Or maybe customers came to the branch and you know how broken the process were. Now it's become, the ecosystem has now become e-mandate for setting a mandate, e-KYC, biometric and all that. Let me say e-KYC through OTP and o-KYC, c-KYC, etc., CERSA, etc. So our banking system's ability to, let me say, get involved into these new ecosystems has dramatically changed the way banking is done, at least as in the example of origination is concerned.
Right. We are seeing massive digitization happening in India, and the government's leading at the front with, its range of digital public infra goods. We have Mr. Dilip Asbe here from NPCI, and UPI is really powered digital payments in India. We also have ONDC, Mr. Koshri, and then account aggregator, which is going to be a game changer when it comes to database lending. What impact do you expect this to have on your bank?
let me just talk philosophically for everybody, and then, you know, our bank will come somewhere in the end. And I don't want to talk about my story and all that. Now, the data, as all of us know, first of all, like account aggregator is coming up. It's a massive, massive thing. Imagine you can give access to 5 of your accounts to one lender, and that lender can access those 5 accounts and decide how much cumulatively you have in all banks put together, how much cumulatively you're spending on a monthly basis, how much cumulatively you're earning across all bank accounts. You know, the kind of information or data is available is dramatic. Even when customers are calling the call center, you're getting hundreds of thousands of calls a day. Now, there's data everywhere. Now, or bureaus for that matter, that's an important part of the ecosystem. There's a lot of data sitting there. Let me say, even ONDC, when Asman Koshi develops it, it'll have a huge amount of data available there. Now the thing is that it's like, you know, water, not a drop to drink. Like that, you know, they're gonna have, you know, have data everywhere, but everybody's not using all the data. It's like lots of data available. Using all the data to take meaningful decisions. So one of the things that we are putting together, which I think everybody in the banking system is doing, is to not just data be like gold mine hidden somewhere like gold. It is to actually harness that data, put together a quality data lake, put together a single source of truth, put together good quality governance around it, put our ability to do analytics on that database, our ability to convert it to meaningful decision in terms of hyper-personalization of customers and so on. We'll talk about that if we have time. So our ability to use all this data, make meaningful, insightful decisions out of it, I believe is a major inflection point in capability building for our organization.
Right. What role do you see for fintechs beyond being distribution partners or distribution channels for banks?
You know, I've been seeing the evolution of this fintech ecosystem for quite a while, as you can imagine. In fact, at some point of time, when Capital first started, we didn't have the term called fintech, but I'd say that we were probably the first unicorn. If that term existed in that window, we were valued over $1 billion over that at some stage. But let me talk about fintech. There are 2-3 types of fintech that are operating here. One is a set of fintech who is just playing the role what you just said right now, that they are saying, listen, we are fantastic in originations, I will originate for you, and we'll book it on your banking system. That's one kind of origination, and there are a few people who call themselves neobanks, etc., and they do that work. There are another set of fintechs who are enabling a loan journey. You know, for example, you get a bank statement from customers. Someone's got to, you know, the traditional way of evaluating it can be that it goes to a chartered accountant, someone does a data entry of it, and they make some analysis about what amount of balances the customer has on the due dates when the EMIs will come, say between 1st or 5th of the month, and then they take a decision, right? But that process is so broken and so archaic, and data entry on Excel spreadsheets and all that. So there are some fintechs who are actually taking the data from these source systems like PDF, etc., making meaningful decisions out of that, and you know, and that's another kind of fintech. And they're all value adding. They add tremendous value in the chain of the process. By the way, they all add value in their own respective ways. There's a third kind of fintech which I'm seeing these days, which are really, I believe, sometimes I feel can create even more value than even consumer-focused platforms. And these fintechs are, and I actually like a lot of them, and I think they're fantastic, are these people who go to enterprise. They're not exactly D2C and, you know, all that. So they're enterprise solutions. So enterprises that think of a traditional service provider. So there's some origination work going on. There's some monitoring work going on. There's some booking work going on. There's some collection work going on. You know, the whole stack works. So imagine someone says that, hey guys, all of you are pretty archaic. Let me develop a fantastic origination stack. Okay? Now, I made the stack, which none of you built. Now all of you plug to my stack, and I'll give this origination stack to everybody. You know, collections, you guys are all pretty archaic. Let me build a phenomenal collection stack. Now everybody can plug to me. So I believe that this is an enterprise solution, you know, CRM, for example. So I believe, you know, I told you 3 types of fintechs, but I think, you know, they're all coming up there.
Right. Final couple of questions. So as the CEO of a bank, and as a CEO, as a leader in the banking industry, which is constantly getting disrupted by technology, what keeps you awake? What's the number one issue that perhaps gives you sleepless nights?
See, we are
I hope you get a good night's sleep, but what keeps you awake?
No, I do get my bank is doing very well, and I do get a sleep. But the thing is that if you ask me, see, we're in a tech conference, and I must say, of course, one of our very significant tasks actually is to build a really good tech platform. How the core systems are, how the middleware will be, how the engineering will be, how will the, let me say, the customer interface channels will be, how the customers will be, and how the whole stack will talk to each other in a seamless way, how different parts of the technology organization will talk to each other, how they'll be seamless, how they'll be working well with each other without friction, etc. These are all roles for a CEO, because if you really don't get the stack right, then there will be friction in the organization. There's enough friction in the customer journey itself, which we have to scratch our head and always get it right. But last thing you want to have friction within the organization. So these are roles for I'd say for at least for me. The other thing which I'm really crazy about is culture. I mean, we believe we're a new bank, and we have, if we get culture wrong, we'll get it all wrong. From day one, we're thinking culture. If you mess it up, there's a big price to pay.
Right. Also tell us the role that mentorship plays for an entrepreneur. You're someone who's always looked up to Mr. K.V. Kamath. And I remember reading this very interesting anecdote where he would give you his tie when you clocked each milestone, when you did the capital.
Listen, Chandra, I told you today, I'm not talking about myself. Of course, Mr. Kamath's a great man, and I forever regard him. But it's not about myself. I think we should, I don't want to talk about maybe the bank or tech and how it will impact all of everybody's lives. I don't think anybody will learn anything from me just listening to a story and all that. But the previous thing about culture. The thing about culture is that I told you there's a price to pay if you don't get it right. Let me explain. Now we're a new bank, okay? If we, one of the fundamental ethos we speak in our bank is that we want to be ethical. We have 3 words we set for ourselves in the vision statement. Number one, we say ethical banking. We say number 2 and number 3, which I'll come to later. We say digital and social good, but let me focus on ethical. So there's a price to pay to live that statement. It's just like, it's not just a slogan by saying I'll be ethical. I mean, it's just it's a meaningless if I were to just say it. So we are saying, okay, now what does that mean? How do you implement? So by saying it as the philosophical statement and living that statement day in and day out, I'll give you one example. For example, we looked at the statement of fees and charges that are charged to customers when they keep a bank account with the bank. One of the charges we saw is that, okay, customers come to a bank, they put deposit cash. So if they're depositing of cash, nothing wrong in charging. Many banks are charging, is okay. But then you see the charges statement, it is ₹2.75 for 1,000. After for 1 lakh to 2 lakhs, it is ₹4.75 per 1,000. Then it is 14.75 for Delhi, Bombay, Calcutta, Madras. So these kind of complicated transactions, nobody understands. So I feel, yaar, hum to paisa charge kar rahe hain, customer ko pata bhi nahi, they're giving us the money, right? They need a calculator. So we said, yeah, the bakwas hai to yaar, it's very expensive for customers also. It's not that we don't mind, it's not that we mind charging fees. We want to charge it just the correct way. So we actually went list by list by list. We scrapped all the charges which we thought was complicated customers to understand. For example, we saw jargon in our terms and condition. We're taking out all jargon and terms and condition, trying to write a neat jargon, neat sentence around it. So I'm trying to say that there is we're trying to build the bank like that. So I don't know how many of you in the audience don't have a bank account, but I can tell you wherever you're keeping a bank account, open with us, monthly interest credit, pretty attractive rate, but more importantly, genuinely clean banking. If you find one fee in your bank statement, even for a 10,000 rupee balance, you can call me. So you will not find it. You'll not find it. It's not there. So except minimum balance charges, which is we need to have. But I'm trying to say that's the way we're running the bank. So when you say culture, I give you one example. put it in every single line of activity we do. So goodwill will come over 10 years, 20 years. I don't know when the goodwill will come.
Since you mentioned culture and how you keep customers front and center, I remember you mentioning a while ago that you stay away from lending to questionable people or questionable enterprises because dirty money will find its way to the bank, to the executives, and it will not give you a good night's
It is dirty
sleep.
money, right? So, for example, we suppose somebody is one of our customers sold insurance, and we don't want to say sell, and make money. Of course, we're a bank. We have to get a revenue, and we have to. I'm not against making money, but I'm saying that we're talking the clean way. So we say that if there's a statement, if somebody's been sold insurance, we say fine, our front end has sold it, but we have set up an internal check and balance which will correlate the customer's profile with the product the customer has bought. And they say, hey, my God, how could a 70-year-old customer now buy ULIP? Something scratchy. We call the customer and say, hey, really, have you taken this product? So that's what I'm trying to say, that and if the customer says, hey, I didn't know it was missold, I say, okay, I'll cancel the money back to you. So we are trying to genuinely make this an effort. Now, I don't know, someone asked me one day saying that, how is the bank going to get the benefit of this? You're spending a lot of money building this. God knows after 5 years or 10 years, people will realize the power of this, because I can't go and teach everybody that you're charged this, charge that, I don't charge. It's very micro transactions. But I'm telling you, you'd give it 5 years, 8 years, this bank is something special, let me say it like that.
Right. On that note, thank you very much, sir, for talking to us. Thank you very much.
Thank you, everybody. Nice seeing all of you here.
Right? That's quite a journey. A huge round of applause, everyone. Chandra, I'm going to request you to stay on stage for next session as well. Well, in 2022, UPI processed over 74 billion transactions worth around 125.9 trillion, which is a 90% jump in volume terms and a 76% jump in value compared to the previous year. India's homegrown UPI is leapfrogging to create multiple use cases, and there's been a lot of buzz around its diversification and global partnership in the last few weeks. No better time than to discuss how India can sustain this payment juggernaut. Please put your hands together for our next speakers, Mr. Dilip Asbe, CEO, NPCI, Harshal Mathur, CEO, Razorpay, and Shinji Kumar, CEO, SaltApp.
I promise you this is the last session I'm moderating. I'm sure you're already bored of seeing me on stage. But thank you very much, Mr. Asbe, Harshal, and Shinjini. I'm particularly thankful to Dilip Asbe because he's very, very tough to catch whenever we ask him for interviews. But thank you very much, sir, for coming to Moneycontrol India Fintech Conclave. UPI, it's been quite a journey and people cannot stop talking about it. Recently, at an event, Pramod Verma spoke about how it began when you, Pramod Verma and Nandan Nilekini, sat in a room and you all had just one problem statement, how to send money like you would send an SMS or email. And this was barely 7-8 years ago. Did you ever think that, we would reach here so fast? We are already crossing 300 million transactions a day.
See, first of all, I would like to say that, we Indians have a habit of celebrating too early. So I don't think UPI has really reached to the potential what it should have, right? So I think it's a journey. Yes, there is some milestone we have covered, but I think for a country like India, we should do 10x from here, right? That's what, and when I say 10x, it's not just a hypothetical number, because when we started thinking about $1 billion a day, it appeared like a hypothetical number, right? But now I think everybody believes that $1 billion is just 3x away, right? In that sense. So I believe that, there is a lot more work to be done by everybody, including NPCI, to truly unleash the potential of UPI, which is nothing but a 10x volume from where we are. And second thing is, while of course Pramod would have said something, But see what happens is the systems like UPI, Aadhaar, and some of the digital public infrastructure, while some people might get a credit, like for example, I being with NPCI, so NPCI being center of it, we might get some credit. But a lot of hard work by banks, fintechs, the RBI, and the government to actually create a successful DPI, right? So I think it's a lot of efforts by the ecosystem to get to a platform like Aadhaar or UPI for that matter. And I think it's just, we are still there at a right growth curve, and I think we should not lose an opportunity to scale it up to 10x from where we are right now.
So when can we expect 1 billion transactions a day?
So again, we think about this daily, I'm saying I wanted it tomorrow, but I'm saying that, realistically, I think if all of us continue the efforts, it needs investments, right? Because we need to get some more, at least 100 to 200 million users on UPI. We need another 25, 30 million merchants. So both demand and supply multiplier effect will get it there. Some of the use cases like mobility and those kind of things, which are not yet operating on cash, has to come inside. So I believe that 2 to 3 years is a good time period to assume that we'll reach billion a day.
So 1 billion transactions a day by 2025.
I think so. Yeah, I think so.
That's a good headline. Harshil and Shinjini, your thoughts on, what can give UPI thrust, or what can help it sustain the juggernaut, sustain the UPI juggernaut? They've undertaken a whole lot of initiatives, from UPI Lite to credit on UPI to various other things, but if you can give us your perspective.
I think, we are all building a lot of our businesses on back of what Dilip's team does, so a lot of credit to him.
So investment to wahan se mil jayega.
Become billionaire now.
No, so I think UPI is really, I think while it started as a great thought, I think the constant iterations on UPI is one of the biggest reasons for its success. That constantly NPC has come up with newer and newer features on top of UPI, which has opened up the opportunity far more and far wider. I think the UPI AutoPay, for example, when it was launched, first the mandate part, which completely changed the way IPOs happen in this country, and then the AutoPay part that came in and solved a big problem for subscription payments. And now with UPI Lite and so many more innovations are coming in. I think for fintechs like us, I think sometimes I tell Dilip that it's harder for us to keep pace with the kind of innovations that NPCI comes up with. But I think that is where the amazing part about UPI is the way the platform is built in form of a public-private partnership, right? So NPCI builds the base stack, the private players like us are able to build on top of it and get it to the last mile. I think that collaboration will play the key role in getting it to the next 10x, as Dilip says. I think what we have done so far is that we have solved a lot of problems which are the truly transactional problems, which are the tier 1, tier 2 problems. I think the next phase for UPI is to go to tier 3, tier 4, where it's not just about making the process seamless and simple, but also making people aware on how to use it in low connectivity, poor infrastructure areas. And that's where things like UPI Lite, for example, play a critical role in getting it to the actual downstream areas where forget UPI, they have not seen digital transactions ever before, right? Like people who are used to just cash. And while we all are proud of the growth that digital payments has seen in the last 5-6 years, but I completely echo what Dilip says, that I think the opportunity is further 10x from here. And there's no doubt about it. If you look at the GDP of India, right, like you're still covering like 5-7% of that. There's still a lot of opportunity for us to digitize a lot of flows. And while I talked about tier 3, tier 4, there are a lot of B2B flows, for example, that are still not solved for. And we deal with that on a daily basis, given that we power businesses. While their collections are happening through digital channels, a lot of the downstream payments, whether it's paying their salaries, paying vendors, paying suppliers, all of that is still not digital. And those are large volumes, those are large value transitions. So I think the next phase for growth would be looking beyond the transactional stuff and seeing what are specific payments use cases where people are still adopting to either old school methods or cash, and how can we bring in payment instruments to solve for those challenges.
So basically increasing the total addressable market beyond.
Total addressable market, definitely. I think the TAM expansion is definitely possible. Again, looking back at India's GDP, I think there's still a lot of money flows that are happening that are not moving to the new rails that we've all built. And I think the next step would be to take those rails to those segments.
Shinjini?
So I think UPI has been a wonderful journey to watch. And one of the things that we need to keep in mind is that three things that have given it massive tailwinds. One is that when you build something afresh, it's always much better to drive that than to take an existing
Legacy.
product or system, legacy, right? So in any case, in this country, we are not very good at restoration. We are very good at building new things. So that was one great thing that happened. The second thing that happened is that there was demonetization. And the third thing that happened was COVID. So a lot of the cash replacement that happened with UPI has got a lot of everything that both of them talked about, and innovative use cases like ASBA and various things that have come out of the NPCI stable, as well as various fintechs. But the net, the factor is that the external ecosystem has also given it a very massive push, okay? Now, if you think about stepping back and taking a BAU, stock of things and say, where do I now focus? Because now I know that this whole room is some shape or form of UPI user, but who is using it for a real problem to be solved? Who is using it despite friction? Who is actually using it once in a year and never coming back to the platform? Then you start to spot the use cases that are likely to take it to that next step. So to your original question was, what's the next step? And in my mind, actually, I a little bit disagree with Herschel. He actually said both things. The bottom of the pyramid, I feel, actually has adapted to that cash replacement much faster in many ways because of obvious reasons. So like, because I have 2 homes in villages, I can tell that I travel without any cash ever, and I think that's a very good ecosystem. But it's actually the reverse, which you also made that statement, where the use cases are very much existent and they are not yet productized at this stage. So the payment failures, for example, in multiple collection scenarios, to me, cross-border is a huge problem solver. Just to summarize it, essentially the magic of UPI in remote scenarios is extremely useful. That use case is like irreplaceable because cash cannot do that job. And as the economy becomes much more remote, people are working remotely, they're earning remotely, they're shipping orders and expecting to receive payments both within the country and outside the country. Nature of commerce is fragmented. There are many more small value payments. That opportunity is just so massive to kind of build upon the success that this system has had so far, that I think any number is an understatement, like Dilip said.
Dilip, UPI Lite, many people are saying that, it's ironic. UPI started out as a wallet killer in 2015 because once UPI came, people stopped using Paytm wallet and MobiKwik wallet and so on. And UPI Lite, in a sense, is, you're sort of bringing back wallets. I understand the technical use case, huge number of transactions, very hard for banks to manage that volume, but you've sort of reinvented the wallet in a new avatar.
See, okay, look, I'm saying we are trying to do whatever is required to do the 10x growth. And let me explain. So today, we process, and there were 2 issues which we had in our mind, right? What it means is, we look at, when we look at the transactions, maybe up to 2,000 to 10,000, 10,000 above, right? So the way I look at it is, below 2,000, maybe the UPI could be the preferred option. The 2,000 to 10,000 might be the debit card would be the preferred option, and about 10,000, obviously the credit card would be the preferred option. That's the way segmentation in my mind. The second problem, what we were looking at is the cash, actually the issue of cash. Today, the issue of why would a customer prefer a cash, right? And today, when we look at the segmentation of online transaction and let's assume that the debit card transaction to enter data, everything takes about 10 to 15 seconds, similar like credit cards. The UPI could take 5 seconds. Now we wanted something to give the guarantee that transaction will happen, right? And also ensure that, while the 4 or 5 seconds is a good time, it's not a bad time to have, but if the large scale of low volume transaction has to happen, then we need to improve this 5 seconds. So what we wanted is the transaction to happen locally at the mobile, right? And as soon as we see more and more smartphone, high-range smartphone coming up, below 10,000 rupees, the ability to make the transaction in a really less than a second or less than 2 seconds, the chances improve, right? The way UPI leveraged the smartphone penetration 5 years back, That was another, the jam trinity of Honorary Prime Minister was UPI is the beneficiary of that. So that is where we are working that, let's make the transaction possible in assurance that transaction will happen, point number one, so that the failure will go off, right? So the cash has a finality, right? Once you give the cash, there is no way denial of service can happen. So we had been thinking long time that, how can we ensure that denial of service does not happen because of anybody's problem, whether it's NPCI problem, bank problem, whatever it is. So the low ticket, the assurance that transaction will happen on light is very high. And the second is now we have the opportunity to compete much better with the speed of cash, right? So I think those were the design considerations when we started thinking about the UPI Lite. Because otherwise the billion a day is not possible in that sense.
Right. Two-part question, Dilip. One theme that everyone is talking about now is how UPI is going global. It's a made in India good that's going global. You recently signed an agreement with, entered into a collaboration with Singapore's Pay Now. So how many more countries can we expect? Are there more on the cards? Give us a sense.
So we have been working with some of the countries, initial discussion, RBI.
Which ones?
And RBI and the government has been kind of helping to reach out to the central banks and, because see what happens is the cross-border payments is fairly tricky, right? From the rules, regulation, compliance standpoint. So unless the two central banks comes together, right? It's not very easy to implement that. It will take longer time and it will get into some hurdles, compliance issues or regulatory issues. So I think the way Singapore happened, I think it's a landmark, and even at the G20 conference in Bangalore, where the finance minister and governors were there, most of the people I heard talking about the India-Singapore connectivity and how the initiative by both the regulators, government coming together and kind of executing this was a kind of a model architecture for all the countries to pick up. So, for example, we have been talking to some of the countries in Middle East, some of the countries in Africa, South America, to see that, whether the globalization of the UPI, RuPay is possible. But obviously, these kind of projects take about 18 to 24 months time. So very early stage. But I think very clearly the government and RBI is looking at, next 10 years, 15 years to build the pipes with the way India is domestically self-sufficient now. I think the vision of the government, the RBI, the Prime Minister is make India self-sufficient on the cross-border with the select countries of our interest. I think that's what the vision is all about.
Right. Harshil and Shinjini, UPI going global, what does this mean for fintechs in India? What kind of doors does it open, for instance, for a payment gateway, for Razorpay?
Yeah, I think I'll talk about as more broadly as India stack going global. I think that's an amazing opportunity for Indian companies. And the example I'll give is of US, right? So the reason major internet companies are US based is because internet as a protocol came from US and most of the technology around it came from US. So companies who had built there and were successful there, it was far easier for them to be successful outside US because they were already used to that stack. They'd already played in that stack. And while Google, homegrown Google could come up from India, it was much easier for Google from US to come in and win that game. I think the same same opportunity applies for Indian companies where India stack goes global. Right? And I think that's the work that's in progress by the government and by regulators and by everyone else. I think it will create amazing opportunity for Indian fintech companies to take advantage of that if our stacks are being used in other countries or even replicated in the other countries and in some shape and form that's already happening, even while what Dilip is talking about is more cross-border flows. But a lot of countries, for example, recently Malaysia launched Do It Now, which was their own version of real-time payments. A lot of other countries are looking at launching real-time payments on the lines of IMPS and UPI. And if that happens, the opportunity for companies, fintech companies in India who are already built around real-time payments, who have already opened up a lot of use cases for real-time payments, built stacks around that, products around that, I think it will be an amazing opportunity for companies like that to go in those markets and capture the share in those markets as well and piggyback on the success and the R&D that they have already done in India. So I think as a company, we are already looking at it. We recently launched in Malaysia because of this thesis, and we are looking at other markets in Southeast Asia who are following similar footsteps. And I think most of the emerging world, when I'm talking to regulators and policymakers, they're all looking up to India on replicating the success that India had in digitization. I think that will create an amazing opportunity for Indian fintech ecosystem.
You should ask him that when Razorpay will become bigger than Stripe.
Sorry?
Razorpay will become bigger than Stripe.
And I hope soon. But I think...
He's building financial infrastructure for India.
Yes, so I think unlike a lot of the players, my focus is to go deep into India. So
Harshil, he's given a target, 1 billion a day by when. So now...
You are asking me a lot of targets, you should ask him also.
No, our targets are written a lot by your targets.
Okay, I am taking no targets on this one, but I'll share a story. So when I was in Paytm, I used to go to Delhi every week and I used to stay at India International Center. And almost every evening, because demonetization had happened, and almost every evening, I would find myself sitting there and talking to some old person, because that's the type of population that is there. And the moment they heard I worked for Paytm, almost every single time, they would talk about this one problem. And that one problem was that they didn't know how to pay their electricity bill, they didn't know how to pay their phone bill, they didn't know how to pay anything, and they needed to make a lot of payments. And their children were outside India, and their children wanted to pay, but they could not pay. So this is a problem. I'm sharing it as an anecdote, because what you talked about is a huge opportunity for entrepreneurs to build on the India stack to solve for different countries' population. But I think that because we are such a migratory economy, both within the country as well as internationally, I think that, and that's why I was talking about the remoteness of money and transactions, actually that market opportunity is huge, both ways. So I think cross-border, in any case, the maximum friction in payment is in cross-border. So, and because we now have very small value transactions, that friction is beginning to hurt. Banking system is not able to cope. So I definitely think that's a massive opportunity.
And you can just imagine what Sanjini said, that, you know, cross-border payment, the way domestic payments are happening in 5 seconds, a 30-second timeline for a cross-border, making the two countries' bank account interoperable. I think it's a great achievement in that sense.
Right. You know, I mean, UPI is one thing, but you're also giving a good fight to Visa and MasterCard with, you know, RuPay. And now we're talking about RuPay credit card on UPI and credit on UPI. What kind of opportunity does this open up?
So see, you know, when the NPCI started, before that about 30, 40 banks were issuing the debit cards. NPCI last few years, about 1,300 banks are issuing the debit cards now. And similar, you could assume that similar impact on variety of payment systems like NACH, IMPS, UPI, AEPS, and about 1,300 plus bank issuing getting the DBT directly into the accounts. So I think the NPCI's core objective, and that's what RBI keeps expecting back from NPCI, is we are here for inclusion. We are here for ecosystem creation. We are here for expansion. So our belief is the credit on UPI, the objective in next 5 to 7 years time is how are we able to expand the market. Today about 30 million Indians, maybe unique Indians will have a credit card. Our objective is, now that payments has created a layer of about 300 million users, how using the UPI's ability of the customer being real-time connected, how slowly we can grow and provide the benefit in next 5 years time to this 300 to 500 million customers, right? So our objective is to expand the ecosystem. Otherwise, there is no point in, the 30 million customers who have already got the credit, keep supplying that. So one objective is keep expanding the market, keep expanding the geographies to provide that credit. The second thing is, I believe, is because of UPI, real-time connected customer, contextual, I think the way credit is given, it's going to change. In next 3 to 5 years time, the way, instead of giving line, can it be on demand? Instead of giving a line, can it be contextual in terms of, this is what I want to buy, and this is where I think Bajaj Finance has done a great job, right? And compared to the other players. So I think the whole lot of programmable money, programmable credit comes inside when we talk about the RuPay credit on UPI or credit on UPI.
One theme that the minister and the RBI executive director touched upon was the dominance of foreign tech companies in digital payments. And NPCI seems to be postponing the problem. Like you've given this extension on 30% market cap, but how is that 30% ever going to happen without, you know, I don't know, an incumbent taking away market share from a PhonePe or somebody else? What's your long-term thinking on this, sir? How are you going to address this?
So I've been asking Harshil to launch a consumer app. You know, he's saying, no, I'm a
Harshil,
B2B
when are you
player.
going to do that?
But I'm just saying,
He doesn't want to burn money. He's profitable.
I don't want to touch consumer. I'm very clear on that.
No, I think it's a great question. I see, Chandra, the way NPCI looks at the market share cap and other thing is a mechanism to look at the concentration risk, right? And you know, when the WhatsApp wanted to come in, right, and it had 400, 500 million daily active users, and you know, I'm saying everybody thought that, you know, if that kind of users come inside on payment system, it will collapse the ecosystem with the load and the risk what they can bring in. So that's why we looked at a stepped-up approach for the WhatsApp, and we also came up with this whole market share. Almost same day we issued both the circulars. So yes, I think the question is here: how do we make it more participative? You know, today, you know, we are looking at, you know, COVID time. We looked at, you know, the new players coming onto the UPI bandwagon was a little bit slower. But now we see that, you know, there are many players who are looking at the license, TPAP license. The banks are converting the apps, like iMobile is fully live now. The Pays app is coming on UPI. So I believe that, you know, next few years will take to, you know, rationalize the market share, and in terms of expanding the market, you know, in no way it will create the impact on the growth on UPI, because when we look at the 10x growth is still possible. You know, we don't want to take a step which will hurt the growth of UPI at this stage, because we don't believe the time is right. But, you know, it's a policy, and when we believe the market is large enough, there are many players in the market who can take up that load and ensure that, you know, the growth of UPI is not impacted. You know, we will look at implementing this.
So will there be one more extension?
See, we'll look at it. I'm saying we still have about 21 months to the deadline. We'll continue to review it. At the same time, we are also looking at some of the newer methods and newer mechanism, and, you know, we look at credit, look at light, and I believe that some of the new players now the credit is live on UPI, the slice is there. Some of the large the home delivery, the food delivery apps are going live on UPI. So I believe that market may balance it out, but we'll have to keep watching this. We don't know at this stage.
What are your thoughts on MDR? Is it going to stay zero?
Yeah, I think that's why she made me sit here, you know. See, basically, we believe that, you know, there has to be a reasonable incentive. See, payment system cannot be a large profiteering tool, right? Obviously, and that's a thought process which government has. And when the zero MDR came in, the thought process was, let's ensure that everybody adopts the payment, right? This small charge of 20 basis point, 25 basis point, which is like 1/10 of the credit. But what it creates, Chandra, is a friction in the merchant's mind, right? The small guy, if he buy a bed of bread for 50 rupees, he's going to receive 49 rupees and 80 paisa. That creates a kind of confusion in his mind, and that's why he said, no, mujhe digital nahi chahiye, because he compares it with the cash, right? So मैंने 50 रुपए का बेचा है, मुझे 50 रुपया ही चाहिए. So I think the advantage of zero MDR decision has been, it has helped to get the acceptance on at the wider footprint, and that's where you see the success of UPI. But at the same time, if we want to achieve the 10x growth, there is going to be a huge investment needed by all the players on the demand side and supply side to bring in the new use cases, keep innovating, scale up the ecosystem. You know, yesterday governor spoke about, you know, everybody should scale up their system to process 100 crore transactions on UPI on a daily basis, and that the time is now. Don't wait for next 1 year, and, you know, scale up to make your system capable of processing 100 crore right now. So that would need money, right? So I believe that, you know, the government incentives have helped us to at least survive the zero MDR in some way. But I believe that, you know, someday, you know, the government will take a decision that, you know, we will look at, you know, while charging the large merchants, for example. There might be many ways to deal with the revenue for the ecosystem. Maybe looking at high value tickets, transaction chargeable to from the merchant, or create some sort of a service fee for the merchant. Obviously, I think that there is complete clarity that as far as consumer is concerned, the payments will remain free in that sense.
Right. Final question to all of you. We've also, seen the minister talk about how he views regulation. I mean, he admitted that, more coordination is needed between various agencies, be it RBI, SEBI, NPCI, MeitY, that there has to be a multi-stakeholder approach. So your own thoughts on, how fintech regulation should pan out, that, there are no nasty surprises for founders. Shinjini, perhaps you can start, and Harshad and Dilip.
I guess I am the only one who can say this, but regulators, even within themselves, have departments that don't talk to each other and that work against each other. So forget about coordinating between regulators. So in fact, when Ajay was talking about this idea that as long as you are fair to the consumer, you are also on the side of the regulator. That's an assumption which should hold under normal circumstances. But what is happening gradually is that with digital technologies, consumers' expectation is to have a one-stop shop. So consumers' financial life is coming together, and regulators continue to be fragmented. And in fact, there is increasing fragmentation because as they seek to specialize more, they actually want to create more specialized verticals. So actually, on the one side, you are consolidating, on the other side, you're fragmenting. How to bring that together, the solutions so far don't seem satisfactory to me. So when people say, I have one sandbox, you come there and do something, that doesn't seem like the satisfactory option. At some stage, I think that between regulators, there has to be a little bit better understanding in terms of saying that if I want to distribute, I'll give you a very simple example. If I want to distribute wealth products and insurance products, I need to have different subsidiaries. Each one needs to be capitalized in a certain way, each one needs to be compliant in a certain way, etc. Even within that, if I want advisory, it needs to be a certain way. So the whole entity regulation needs to move from entity regulation to subject regulation or whatever. I think that's the kind of thing which I would expect would help in the long term. Because even within payments, I have seen, like when I was in Citi, one of the common things used to be that between the Department of Banking and the Department of Payment, they would be issuing different things, and you had to constantly keep coordinating between them. So that kind of thing, I hope will get sorted eventually.
Harshad?
Yeah, I think I agree with Shinjini. I think the complicated part of fintech regulation is that a lot of times fintechs don't fall under a specific sector, and that's where it becomes extremely hard. I think the minister also spoke about it, that sometimes it's hard to define whether this falls under SEBI or RBI or MeitY, and within RBI, whether it falls under the Department of Payments or banking or regulation. And I think that's where the confusion starts, both for the regulator as well as for the fintech, that there are different kind of guidelines that comes in from different directions based on different risks that every regulator is supposed to manage. And for a fintech, the challenge is that, and I think I'll partly blame sometimes fintechs as well on that, the fintechs are very optimistic in their push that they want to focus on the top 80%, 90% customer. The regulator is always worried about the bottom 1%. That's where the conflict comes in, that you feel that, okay, let's remove OTP and my top 99% customers will be very happy about it, but the bottom 1% will suffer massively after it. And the regulator will always watch out for the bottom 1%. So I think while most of the regulations that have happened, if you look back in hindsight, it has actually been very productive for the country. Right? It has been amazing for the country. Right? And some of these, even the most controversial ones, like the subscription regulation that happened, again, now if you look at it, right, like the kind of challenges that a lot of Western markets face, where you can't cancel a subscriptions on time, where you're unable to cancel a gym subscription because you took it 10 years back and they still continue to charge it. Those things cannot happen in India at all. Now, some of those might cause some disruption in the short term, but long term, most of those regulations actually in hindsight have been fairly positive. Even the crypto one, right? Like we all were, like the entire ecosystem was completely unhappy about it, but looking back, a lot of people avoided a lot of losses that would have happened if we were completely open on crypto. So I believe most of the regulations in India have actually been done with the right intent. I think the only push and request, and I think that's what the minister also spoke about, is that how do we create it more collaborative? How do we bring different sectoral regulators together? Because a lot of times fintech use cases will fall in between boundaries and in between lines. Yeah. And that can sometimes cause an issue when one particular sectoral regulator gives a guideline that doesn't apply to the other sector and you are caught in between. I think as long as that is sorted, I believe we are in a good state.
Dilip?
See, we are fully aligned with the regulator and the government, so we have no disconnect. Chandra, when you look at, I think Harshil can comment on that. But I think last 5 years or so, I have seen the government and the regulators have been always open for the consultations and for the Q&A sessions and the industry interactions. So I think they have been very, very open. Their policies are innovation-led. And I think that's why the fintech growth, so I'm saying that we can't keep saying one side, we are growing the digital financial services, one side the fintechs are growing, and the other side, the job is not done fully by the policymakers. I don't think it fits into either of the side. So we should be very clear that when we say that fintech has grown, the ecosystem has been built up, the digital financial services is growing up, I think we must give the credit to the RBI and the government. I think single-handedly they have driven the country to the stage where India is now taking the pride on building the digital public infrastructures, the vibrant fintech ecosystem. So I think, and obviously there would be some issues. When we as a country, we wanted everything to achieve yesterday. So I think there will be always transactional issues, operational issues, but I'm quite confident that the regulator and the government will sort it out.
On that note, thank you all very much for talking to us. Thank you.
All right, a huge round of applause, please. We kick off our session now with a very pertinent topic. Geeta Gopinathan, Bill Gates, Satya Nadella, Sundar Pichai, they all love it. What are we talking about? We're talking about India's digital public infrastructure, or DPI. From Aadhaar to UPI, to account aggregator to ONDC. What's the collective impact of this going to be? Please welcome on stage T. Koshi, CEO ONDC, Shalini Warrior, Executive Director, Federal Bank, Nikhil Kumar, Co-founder Setu, and Sabyasachi Goswami, CEO, Perfios. And to moderate this session, let me invite on stage Kamya Chandra, Advisor, DPI.
All right, guys, thank you so much for being here. While we're here to discuss digital public infrastructure, we also encourage you to quickly grab your physical infrastructure of coffee that's required to run through. So please run in and out. So I'm here today with sort of three folks that have really invested in digital public infrastructure. We've heard in the last session, on the payments digital infrastructure that was very sort of focused on. But I want to first go to Koshi. You worked on the oldest public infrastructure India has, which is Aadhaar. You were one of the advisors in those early days. So can you sort of explain to a fintech audience what digital public infrastructure is and why they should sort of care about it? Why is it relevant to their life?
Yeah, thanks. You're asking me to say the history. Okay, quickly, if you look at Mother Earth has 7 continents, and the last few years we have been developing the 8th one, the digital one. Some of the, and every country in the world was trying to take a place there. Many of them said, let me create huge private sector monolith, like the old East India Company. And so India said, we will have a different way. We will create a lot of, in the place that we want to acquire, we want to put the digital rails. On the top of which, let the innovation bloom. Let that not be restricted to, let there not be concentration. And that seems to be the big challenge globally. And every country, developed and the developing country, is struggling with concentration and its impact on the small business. And the control of the business owners is losing to the intermediaries. And so the digital public good is about giving the power back to the endpoints.
Lovely, lovely. So, Nikhil, do you want to tell us a little bit about the infrastructure that doesn't get talked about as much? Because we all have heard about the UPI story and, the payments journey. But India's digital public infrastructure or India's stack has a lot of other components that maybe aren't as leveraged by fintechs or, banks in the ecosystem. So can you kind of give us a picture of some of those and their applications?
Sure. I think like we know, most of us know the basics of it, which is identity. We use Aadhaar and we have payments. UPI is the talk of the town, so everybody talks about it. But there are additional things that have also happened with them. And fortunately or unfortunately, they don't get the same stage time as the others. So one great example, for example, is e-sign, which is actually built on top of Aadhaar, which enables any business or an individual to be able to digitally sign a document. Another great example is BBPS. Shinjini was mentioning just some time ago about how hard people find it to make their bill payments. I'm pretty sure if you all look back in your own lives, 10 years ago, you would probably stand in a line and you would probably be making a bill payment. Or all of us have this memory of as a kid going to the electricity company or the phone company and making the payment. And 10 years ago, payment gateways and online started, so we used to do that. Now you can sit at home, you can be sitting right now and be making a payment. So that's another example of another digital public infra. Another favorite of mine, which again was not spoken much in the fintech ecosystem, though it's pretty much fintech in some sense, is actually GSTN. In 2017, when the government actually brought out GST as a reform, it's actually backed by a solid technology platform called GSTN. And India is probably one of the only countries which has an open API infrastructure for GST or its tax payments. In the US, there's almost like $100 to $200 million that's actually spent every year lobbying against building APIs.
Wow.
And in India today, 75% of tax payments, tax filings that actually happen through APIs. People don't go to the GST portal to file their taxes. They use their own ERPs, whether it's an accounting software or a large company ERP. And that system talks through APIs to the GST backbone. And there are several examples of like these, right from Wi-Fi, healthcare, skills, education. If I get, I just want to give one more favorite example of mine on education. We all remember studying in schools, and we used to have textbooks either published by state government or CBSE, ICSE, whatever you're studying. And when you have lessons in your textbook, you used to have something like factoids or something which is written in a box, and it would give you some interesting tidbit about that lesson. Those factoids today are actually QR codes. This has been called as a way of solving, we all remember as kids we used to have doubts. We'll stand up and say, sir, I have a doubt, and so on, and the teacher tries to explain. Today, as we speak, most state governments in India, especially the progressive state governments, their textbooks carry QR codes, which are basically augmenting learning for children. So if you're, let's say, studying about some chemical composition and you had a doubt about it, you can actually scan the QR code and it will open up videos, it will open up games, it will open up 3 or 4 other things that actually help you learn better.
Actually, this can also be used for like financial literacy, for example, as campaigns based on, the fintech
so
audience
there's
here.
so much happening around us, just from a digital public infrastructure perspective. I just wanted to give a wide range all the way from financial services, healthcare, education, and so on and so forth.
No, it's super helpful.
Before I take your question, just to add to what I think Pickle was saying and to relate to what Shinjini was saying also on BBPS and the benefit that, Dilip's not in the room, I think, the cross-border BBPS has brought about. So you just visualize it, you have, I come from a bank which has 55% non-resident kind of book. So you visualize a person in the UAE wanting to pay the electricity bill for his home where his aged parents are living somewhere in a village in Kerala. And he just walks into one of the exchange houses and does the cross-border bill payment for the electricity. So, that's completely converted the requirement of sending the cash here, that poor person having to figure out how to go and pay an electricity bill. So I just thought, take that use case. And I think Shinjini was mentioning that, and I think it's it's a great example of how the BBPS platform has gone beyond just domestic payments.
No, absolutely. And the sort of, even residents of the EU or the US don't actually have a single app where they can make most of their bill payments through. And today in India, we have like an ecosystem of apps that can offer that. And, the possibilities are sort of...
Yeah, and we just innovated on a different use case using BBPS, which was, there are these, a lot of people save for jewelry by paying every month some money. It's quite popular down south at least. So we put that now on BBPS for a couple of our clients, and therefore the monthly payment gets done through that. So, the use cases are huge.
Lovely. Yeah, it's a sort of very flexible standard that can be used for any sort of bill representation. That's lovely. But Shalini, out of the 330 banks in the country, Federal was one of the 8 that was present at the account aggregator launch and sort of was stated as one of the early adopters of account aggregator. And that's sort of the new sort of DPI kid on the block. So can you tell us a little bit about, in case you've been living under a rock, what account aggregator is, and also why as a bank, you're excited about it?
So first of all, I'm sure everybody in the room kind of understands and appreciates what an account aggregator is. But I think the best analogy I would give for it is to go back in time before banks like us knew what a credit score was and how to use a credit score. So, the credit information companies had their birth a few years back. And at that time, I think there was a lot of skepticism, etc., around, will this really work? Today, I think you can say it with utmost confidence that every bank uses a CIBIL Experian, and I think CIBIL's become literally like a verb. Have you found your CIBIL? Have you found your CIBIL kind of stuff. So if you if you take that forward now, and I think clearly there's where account aggregator comes in extensively. Account aggregator is definitely the next UPI, the next whatever from the banking industry perspective, because it democratizes the availability of credit, as an example, democratizes the amount of information that is available for people to work on in a manner which is non-threatening for the customer, non-threatening because it is the aggregator in the middle is actually, data blind. So gives you the confidence, that's the first thing that it does. Second, it's permissioned. You need to be, as a consumer, you need to be able to say, yes, I will use it, or I will allow it to be used for this particular purpose. I will not allow it to be used for some other purpose. Allow it to use only for a certain duration of time. So I think it's come up with the it ticks all the right boxes to be able to be used by the banking industry. And that's why we continue to be really very gung-ho about it. In terms of use cases, I think lending is obviously the most logical and the first use case that everybody has got onto and is using it in a form and fashion.
Can you tell us how account aggregator will actually help lending?
I think it's very clearly how, to some extent today what credit analysts do is they take statements from the customer and then you have somebody actually literally putting it into an Excel spreadsheet to decide what the cash flow is and kind of figuring out, okay, this is the amount of cash flow, this is what. Those are literally in the past now. All the information comes through APIs. You can ingest it into a bureau, you can ingest it into a decision rules engine, you can ingest it into anything else, and the output comes out. So lending decisions become that much easier, and the cost of underwriting comes down, as well as the accuracy of underwriting goes up. The other use case which we have worked with one of our fintech partners is on personal financial management. A lot of people used to do PFM in a very crude form, maybe reading SMSs, finding out something from statements. Those are days of the past. You get all the information, you can literally find out what the debits have been towards, what the credits have been towards, and do it. So enormous use cases on account aggregator that will be built. It's a journey. It started, and all of us are on this journey. I think the moment the entire banking industry gets along, the value of it will increase. But I think huge use cases, just like UPI has had use cases and BBPS has had use cases.
Lovely. So, Nikhil, I want to come back to you. As the sort of co-founder of a fintech, does digital public infrastructure make it easier or harder to work with banks? Because the core sort of question behind fintechs is what is going to be the nature of the relationship between banks and fintechs? And so what do you see is the role of DPI such as AA or other infrastructures in changing that relationship? Right?
Well, I'll answer it in a light-hearted manner, and then So one is like, fortunately, banks, they're obviously not technologists, so therefore DPIs are all baked in with APIs, so they have to partner in some form or the other. Having said that, you know, I met first Shalini probably 6-7 years ago, and you know, the discussion that we were having was, how should the bank create an API program? What does it mean? What does it take to do this? And so on. And it's very important, you know, I just want to illustrate this idea of why DPI works. My hypothesis is that the whole reason why DPI works because they're all built as APIs. So you can't, it's DPI, so what is DPI? It's not an object, it's not a thing. Finally, it's actually an API, right? The way a bank uses Aadhaar is through an API. The way a fintech uses UPI is through an API. The way e-signers is used through an API. Like I was talking about GST, it's used through an API. And APIs, for what it's worth, what is it doing? It's basically enabling two software applications to talk to each other. It's a language, it's basically. And if you look at modern infrastructure companies or banks or any industry APIs have enabled banks, you know, in the case of financial services, to scale partnerships. Because if, for example, Federal is a great example, right? So if they're able to build a savings account API, now they are able to support 2 of the top neobanks in the country and enable them to scale these partnerships. And maybe there could be a 3rd neobank or a 4th neobank or a 5th neobank because the underlying infrastructure for that has already been built. So it's very important to understand that building this API infrastructure is a way to scale partnerships in the modern digital world that we are living in.
And in a way that the regulator is sort of kosher with as well, right? I think that's crucial here as well.
So if I just add to that, and I think Nikhil is right, the first time we met with Pramod and Nikhil was around this whole conversation on APIs. And, you know, in the case of Federal Bank, we actually built the APIs first. At that point of time, we had no clue who would be there to kind of, you know, use the APIs. So we built a stack of APIs for account opening, for loan creation, for whatever, disbursements, etc. And then we started looking and saying, okay, now we've got to find, you know, people who we can partner with. And obviously the journey has come a long way since then. And today we've got, you know, 70 odd partners, 400 odd APIs, all of them there. But the API stack was a prerequisite for us to get to this stage. And I think that's helped a lot. And Nikhil and Pramod did help a lot in that.
No, lovely to hear. I think it's becoming clear that sort of the infrastructure is crucial to, I think, scale partnerships across an ecosystem. And on that topic, I want to come to you, Koshi, and talk about the oldest kind of partnership, which is the B2B partnership, right? So can you tell us a little bit about how ONDC, which is sort of the latest in the slew of digital public infrastructure, you know, why it actually matters both to a small shop owner, you know, in India, and why it matters to a fintech innovator. Why should they, you know, be excited about what you're building in terms of a common network for commerce?
Okay, let me say, I mean, there's a lot of questions there, and let me just try to give you a brief answer to all of them. Why it is so relevant. See, today, you know, when I was sitting there, I'll try to give a bit with an example. I saw a tweet coming onto my phone, which was a small finance SFAC, which is a Ministry of Agriculture enterprise. It said that this small millet producer is now on ONDC. And it gave a link. I was just curious because, of course, I'm interested in it. So I just pressed the button, and I'm these days on non-gluten food. So I said, millets, let me just, so sitting there, I could buy 2 kilos of millets from some special, one small farmer coming through an FPO. Imagine that lady wanted to make it available in the current e-commerce ecosystem. It's practically not possible. First of all, that person will not be able to meet the requirement of the large platforms with respect to technology, processes, and everything. And if that person's product has to be seen anywhere in the 300th page, that person has to have a deep pocket. Because it's the intermediaries who is driving it. When what ONDs does is to take and give the power to the endpoint. So that small farmer, FPO, Kanjipuram weaver, or anybody can now make it available because there will be small enterprises, startups who are making it possible for them to make their catalog visible in this open network, where there eventually will be 1 billion consumers available for everybody. And secondly, they can publicize without spending any money to any platform saying that I am available, click this link, which is not possible today. So imagine the kind of possibilities that in throwing up to the business, whether into B2B, whether it is B2B, everybody get the equal opportunity. And what is going to drive them is what they're good at and not whether they have a captive audience. And when, I'll just like to add the other part of it, is that this is where if you really look at any tech, whether it is banks, whether it's fintech, whether it's telco, who all have large digital consumers, they can now, all of us are using it. I mean, practically everybody uses a fintech, practically everybody uses a bank. And when I go there, today they can offer only a limited set of product. Tomorrow they can say that they can find ways to practically let me buy everything. And then they will, with the kind of tech that they have, they will be able to give me personalized buying experience, not trying to push a product somebody is giving them an advertisement to. So that is a big difference. So it will finally lead to personalized buying experience by a buying application who's the buyer's agent and not the seller's agent, which is a huge change.
No, that's incredible. And most recently, you know, we heard the news that Amazon sort of was joining the ONDC network, which finally sort of validated your claims, which you've been making from day one, that it's actually not an Amazon killer, but rather a market expansion and a growth metric. Just as UPI has, you know, not killed cards, it has grown payments for all. Right?
Absolutely. See, we always said this is an inclusive agenda. Remember when UPI started, it was supposed to be some slaying something else. Because it's a lot of excitement about when somebody is fighting with somebody else. But the thing is, it is going to expand. Today, if you look at what is happening in the e-commerce, in the buying side, 5%. In the selling side, 1%. When it comes to B2B, practically insignificant. That's digital commerce. Just because we sitting here are the elite of the Indian society are all in it, doesn't mean that all of India is there. Just like 250 million transactions a month went to 7 billion transactions and 1 billion transactions a day, this is just going to balloon because it is going to drive innovation. Okay, for the buying application to find specialized, personalized way of giving the buyer an experience, and many enterprising startup to help the various small and medium enterprise like the Kanjipuram weaver I said and the miller producer I said, to find a relevance to a larger market, not just within India and internationally. Probably you would see international buying. I'll just give one quick example, which is, I want to show the power. I don't want to give the names because that's irrelevant. See, one of the large, it is just an idea, I don't even know how it's going to shape up. One of the large platforms who may not be very keen to be a party in, immediately in India. See, one of their global executives said that I'm not interested in what's happening in India, but if you guys make this large platform with all these smart products available there, probably I will consider it as a sourcing for my global audience. Because even with no business in China, I am sourcing 200 billion a day. I mean, 200 billion, so then I can definitely do it in
So ONDC can actually scale exports is what you're saying, because it's sort of...
It can. Very much it can. Because what's needed, again, tell about that Kanchipuram weaver, my favorite example. She doesn't have, so long as she has an IEC code and if somebody enable her to make an order, she will be able to buy the whole documentation, export documentation, shipping, logistics, everything, by probably DHL or by ShipRocket, who already has done all these things. No, this is only digitally, like, Nikhil was saying, nice API calls, and they all stitch together. So what we are giving is an ability to stitch together to get seamless experience of people giving building blocks based on the specialization and their innovation.
Lovely.
I was just going to say, ONDC is also full of open APIs, so just like every other DPI.
Yeah, so, but Nikhil, I want to ask you, you've been on both sides where you've built sort of a digital public infrastructure on the early team of UPI, and also you've now become a player, as a fintech. What would you say, to a fintech founder who says, DPI is great and all, but it takes too long, yeah. I'm not going to wait for it. We never know when the regulation will come, how long the technical standards take to get published. There are teething issues at the start. I'm not sure if this is something to bet on or not. How would you, approach that problem? And would you say they should stay away from DPI, or they should sort of embrace the ambiguity?
Well, not a big fan of generic gyan in the sense, it's very hard to generalize and say this because, see, one thing, okay, let me where the founder is at because that's what I'm now most closest to. That in a founder's life, especially if you're venture capital funded, there are only fires in your life. There is morning, from the time you wake up, by the time you go to bed, you're just dousing off one fire to another. And just because those fire, you're not looking at them literally, right? Every WhatsApp message you get, every email that you get, every Slack message that you get, something is going on like this that you need to douse it off. So, look, I have a lot more empathy towards all the founders today in the sense of, like having gone through one journey and, understanding it. Having said that, in terms of, so the reason why I wanted to call this out with that there is no generic advice is because, see, the world that we are living in is kind of complex, especially in today's market when we are trying to conserve cash and survive. The first advice that anybody would give to a founder is to survive. Now, whether you want to survive holding to some DPI, whether it is through closed infrastructure, whether it is through doing some services, some solutioning, whatever it is, it doesn't matter. I think like that will take precedence because unless you can exist, unless you can float, unless you can breathe, you're not going to be able to live. So that would be the first advice. Second, in terms of, like we can only point to examples of companies that have benefited from such digital infrastructure coming up. Like we had Nitin at Zerodha who was speaking about it for like almost like 7-8 years. Nobody cared about like what they were doing, what business that they were in. They just happened to be like some JP Nagar broker guys and the Bombay gang.
Aadhaar eKYC changed the game.
Yeah, then suddenly Aadhaar eKYC came and then, e-sign came and UPI came and therefore the trifecta happened and suddenly Zerodha became a household name like from 2016-17 onwards. Like Harshal was here, Razorpay. They were an early upstart in Bangalore doing payment gateway. Banks were not sponsoring them, running around, etc. They were the first PG who went to enterprise merchants and said, and nobody is giving you UPI, we're going to give you UPI. Right? They were the first UPI enablers on the online world. We have had companies like PhonePe, which didn't exist at all, being created. We can point to these examples. But we can't promise those successes. And that's what I would, that's the caution that I would drive in to say, look, I mean, it's totally up to your context and convictions because what made a Razorpay or a PhonePe successful is not just DPI, but the founders, the context that they were in and all of that stuff.
No, lovely. I think that's
said that. I think clearly DPI is obviously been a base on which most of this has grown. Yeah, so it's like necessary but not sufficient.
Yeah, exactly. It's necessary and not sufficient.
It's a neat summary, ma'am. But I think if you can also point to whether you think DPI actually helps inter-sectoral or inter-regulatory issues. Because as we know, account aggregator, for example, cuts across securities, banking, pensions, and IRDAI insurance, which are 4 sectors which normally have completely sort of different regulatory rules. So can it sort of play that role? Has it helped across sectors?
Yeah, I think you've given the example yourself. So account aggregator is obviously started with banks, but it can't be full scale and complete till it gets IRDAI, SEBI, PFRDA, etc. on the bandwagon. So clearly DPI is built in a form which is sector agnostic and geography agnostic, etc. So all good examples. BBPS is another good example. Any kind of biller can come onto that system, so it becomes a thing. So I think, yes, the answer to the question is DPI is intended to be sector agnostic, geography agnostic, and will built that way. Will it happen overnight? No, even account aggregator has its growth pangs. Will take time before all of this comes, because there's also, the cleanliness of the data, the kind of data that has to come through, etc. But clearly that's the way forward, and I think, I think the minister articulated it well enough, RBI, EDA. So we do believe that that's the way forward, and therefore it's best for banks like us to be on that bandwagon early enough so that we can take full benefit of it.
I just want to add to this. One is looking at this from a regulatory perspective around and so on. But it's also kind of important to put it in the context of the second order, third order effects some of the baseline DPIs are having on other industries. Like if you take example of ONDC, for example, like this connection, just so bear with me, right? So you can get a GST number in India today only if you have a PAN number. Okay, so from your PAN number, you get a GST number. And once you get your GST number, that's probably useful to sign up onto a platform like ONDC. Then you get returns and so on and so forth. And then you use something like UPI to collect payments, right? So there is this one, where the same digital public good, which happened to be in the realm of identity and financial services, is now enabling a new sector called e-commerce. Take healthcare, for example. The government has started something called the National Health Mission, which enables everybody to get a health ID and so on. So all of you got your COVID vaccination, right? So how did COVID vaccination happen? How did the government know that you're not getting 3 vaccinations or 4 vaccinations? It's because they used Aadhaar to deduplicate and then gave you a health ID, and on top of this health ID, you got vaccination, right? So if you look at the kind of second order, third order effects that it's set off, like there is something that the government is working on, skill credentials. There is something for MSMEs called an identity program called Udyam, which is again built on top of Aadhaar. DigiLocker, and many of you would have used DigiYatra if you've traveled to, to Bombay today. Built again on top of, this thing, and which is kind of changing the way we travel. So one is to look at it from a regulatory perspective on what changes, but the other side also to see is from a consumer's perspective or a user's perspective. You are actually seeing the same baseline infra have second order, third order effects on segments that you wouldn't have imagined at all. And that's one of the fascinating things that's happening right in front of us.
Lovely. So last question, I think, Koshi, I'll come to you. You've seen now all of the blocks come to life and you're building the final block. So if you can share with us kind of your estimation of the kind of impact that this will actually have on India's, let's say, economic growth when you have to combine everything. And assuming, NDC scales, just in a year or so, I think we'll hit scale. so just let us know, how much you think this is actually going to change the game for India in a combinatorial manner.
No, so that's a very easy question because I can talk very, very future ahead, and it's not going, that future is, in our world, when you say very future, it's not decades, it's just years. So what I expect is that in a few years' time, every product owner, it could be a physical product or it could be a service, which can be expressed in a catalog. That means many people would be wanting to buy it. It's not a bespoke kind of solution. Will make the catalog visible in this open network of open ONDC. What does it mean? It's like everybody having a web page. Everybody will have their digital catalog present. Then you will have specialized buying application who, based on the kind of clientele they are dealing with, it could be elite customers, it could be mid-segment, it could be village, so, people from the villages, rural economy, anywhere. There'll be different specialized buying applications which will help their clients to source what is good for them, not what is pushed by somebody else, which I think is going to be a fundamental shift in the way commerce is running. So if I use one of the comments which created a little controversy is that e-commerce as we see today will cease to become relevant. And it is going to completely change. It is just going to become one more tool, one more channel for the product owner.
Lovely. So we've gone from eKYC as a base building block to sci-fi future of complete alteration of e-commerce.
I just want to add one last point to, like Koshi was saying, that we were talking about this the idea of DPIs, right? So, like, I spoke about GST as a DPI, as an example. Imagine if GST didn't exist, ONDC can't fly. Because the amount of complexity that used to exist, there were 1,800 tax classes that a small business had to take care of if you were to sell all across India, which is now reduced to 4 or 5 tax classes, right? So while the law and the compliance has been solved for, that is now enabling something like ONDC to come to life. So if this didn't exist, imagine, like, ONDC would have probably had to build some tax simplification, blah, 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 etc., everything else to actually make this to life. The reason why all of this is in the realm of, possibility that it can happen is because they're all interplaying very well with each other, leading one, the first order effect, having second order effects and third order effects. And that's where the innovation is pushed on to these second, third order effects. Like, and that's the crux of all things DPI.
Awesome. I'd like to close by asking each of you to share one quick 10-second closing remark of what should a fintech operator know about DPI and how they should look at DPI. Just your last thoughts.
Okay, I'll go first. I think any fintech owner should obviously know what DPI is in terms of thing and use it. And I think build use cases on it is what I've said. And it's not just fintech founder. Banks like us are building use cases on it. Enough occasions where we have gone to RBIH, Rajesh Bansal and his team, to Dilip Asbe and the NPCI team, saying we have this particular use case. Can we build it on UPI? Can we build it on something else? And they've been very forthcoming in it. So I think one is understanding the power of it, and two is innovating with use cases and working with the regulatory agencies to get them done. And not just for fintech founders, for banks like us also.
Lovely, lovely. Nikhil?
I think a lot of people get it but don't get it. And the best way to solve for this is just look around you. Look around you, look at your own life, and go back to what are the ABCD things that has changed in your life in the last 5 years. And I can bet that one of these DPIs have had an impact. If you are able to open a mutual fund sitting here as we speak, then there is some DPI effect. If you are able to send money to someone at home, then there is a DPI in effect. If you are able to file your taxes before and get your income tax refunds on time, there is a DPI in effect. So the best way to understand this is because we are all the users of this. We keep talking like it's made for someone who's, and somebody else will innovate. The first thing is we are actually all users and consumers of this. So the best way to look at this is to look at your own life. And then understand it at that level and then see how can it be useful for your business.
Yeah, no, very true. We should look to ourselves first. Koshi, you have the last word today.
Let me see whether I can say it in 10 seconds. I said, what DPI and what all this enables is to innovate and specialize in what you're good at. If you can do a good job of it, these DPIs, all like you said, all of them come together, will help you to stitch together solutions which will become a meaningful business opportunity for you as well as a fantastic offering for the end consumer.
Lovely. Thank you so much.
Thank you.
Okay, good evening to all of you and welcome to yet another panel discussion. We're just 2 panels away before we hit the bar. So we'll try and make it as entertaining and as interesting as possible for you. So, this panel is basically about, how fintechs are navigating the regulatory landscape. And when we are talking about regulations over here, we've heard a lot about RBI. But, when we're talking about selling financial instruments on the internet, we have to talk about SEBI. And, basically what does SEBI want? SEBI wants the right kind of investments to reach the right kind of investors in the right possible manner. That's from, 30,000 feet above. But, if you dig a little deeper, and I don't know how many of you all would have caught SEBI Chairperson Madhvi Puri-Buch's speech in the Fintech Conclave a few months ago. But she very clearly articulated 4 or 5 things that, fintechs, that SEBI expects fintechs to have. So for example, anonymity is not welcome, the kind of anonymity that crypto offers. Things have to be transparent, things have to be properly laid out. Fintechs should not only just make it easier for customers to come in, but also make it easier for customers to get out. What she calls this as the Abhimanyu complex. That is not looked upon well by the regulator. So this is what I wanted to ask from my panel today as to how they are navigating this regulatory concept when they are taking their financial products. For example, we have an online bond trading platform. We have a couple of stockbrokers, online stockbrokers. We have Fisdom, one of the earliest entrants in the fintech space, selling mutual funds. And then we have a product manufacturer, Radhika Gupta, who needs no introduction. So, how are fintechs basically taking the right product to the right customer in the right possible manner? So, Nikhil, let me start by asking you. You own Grip, which is an online bond trading platform. I mean, we've had stockbrokers for many years, but getting bonds online to the retail customer is the newest animal on the fintech street as far as financial investments are concerned. And you typically characterize the fintech space that innovation happened, a new idea came about. SEBI watched you. SEBI said that, okay, this is an interesting proposition. You're dealing with the retail investor, but you're not yet regulated, so let me now come in and regulate you. So SEBI came out with a detailed set of guidelines in November, articulating what online bond trading platforms can do, number 1, 2, 3, 4, and what they cannot do. So if you can just give us a sense of, how things changed, because, a lot of online bond trading platforms were already there in circulation. A lot of exotic instruments were already there. So how did you revisit the drawing board? What did you stop? What did you restart? And how did you make that transition? Not just for Grip, I'm just saying for all your peers.
Sure. Thank you. I think, just from where you started the question, as a founder of most fintechs, I think the first thing is the intention is to run away from regulation or regulator because it always feels overbearing. And in the desire to grow fast, you believe that this is something that is going to weigh you down. I think what has changed for us, and that speech that the SEBI chairwoman gave, was to say that regulation can be inclusive. And if you move in the right way towards the spirit and philosophy of regulation, I think that's the opportunity to create a large business. Otherwise, you're just operating in the niche. The bond trading platform regulations are an incredible step forward in that direction. Right? I think they've tried to do 2 things, and I think everything that has been said in this conference today and that we have seen from regulators and government is to achieve a balance of 2 objectives. Allowing innovation to happen while protecting the interest, especially of the retail user, of the retail customer. The bond regulations enabled a reduction of 90% in the face value of bonds from 10 lakh rupees to 1 lakh in face value. At the same time, which is great for market development, but at the same time said only listed rated bonds must be available so that there is KYC, no anonymity, and exit is possible. I think that balance was achieved and actually gave in a way a stamp of approval to say, let's make this industry viable, let's deepen the markets, but keeping in mind certain frameworks and guidelines. To our extent, we've been able to now only focus on those bonds. The clarity exists, right? And clarity is great for business. So we've been able to move on our platform, on the bond side, to only listed rated bonds that are available. In fact, we've also set a criteria internally that it will only be A-rated bonds, right? And hence give a further curation.
Only rated A and above.
A and above rated bonds. I think that's number one. And definitely there are steps that we need to take for compliance reporting, but I think that's good for business. I don't see any big company getting built in any fintech sector across the world without taking those steps for regulations. It's processes. I think the second part which we've been able to change in the last 6 months is look at the spirit of what SEBI is saying, and can we introduce other fixed income products that also meet that spirit and that smell test. We've been able to introduce a securitization product, which is also listed rated on the market, and that has become interesting for users to participate in, right? I think a lot of our peer set are now thinking in the same direction, and the combination of having a license, having a clear set of framework in which to operate, will allow more people to create products that will actually benefit the ecosystem.
Radhika, you know, we've had, you've spoken a lot about bonds. You know, you have, thanks to your Bharat Bond Target Maturity Fund, and you've been selling bonds from a mutual funds perspective. You know, we've had, you know, we know anecdotally that investors understand equities better than fixed income. And, you know, debt is obviously can get complicated. Even fund houses have got, you know, their, you know, debt calls wrong at times. And we have had, of course, a few accidents in the past 3-4 years. So one is obviously Nikhil was elaborating upon innovation and you know, reduction of face values, et cetera, but do investors understand fixed income well enough for this innovation to work? I mean, there are two sides. One is that, of course, there is innovation, but the other side is people don't understand. So is it really required, or what can online bond trading platforms do to sort of make the experience easier for investors?
So you had to start by throwing curveballs at me. My only plan for this panel was to have fun with Kezad, but he switched that game. Look, I have probably been the flag bearer for innovation in the bond market. And I want to make 2 points here. One is there a need for innovation, effort, rethinking, retooling in the bond market? Absolutely. I think so much of the narrative around the last 3-4 years about new investors coming into the market has been equity. And there's no taking away from the hard work that has been done there, and it's necessary, and it has a lot of good second-order impacts. But Indian consumers are fundamentally savers. And you know, you have 150 lakh crores sitting in fixed deposits. You have so much money sitting in insurance products. I mean, tax has changed, but in the guise of long-term, you know, debt investment. Is there a space for reforming bond investment? Absolutely and completely. So, and by the way, I do think, and we have had multiple conversations with the regulator beyond Bharat Bond in thinking, you know, I think the regulator also wants that. So deepening the bond market, rethinking about the bond market, I think is something that is important to everyone. Now, on the second point, I do believe bond investing should be simple. So to your point, Kezad, you know, anecdotally, as a product manufacturer, we've seen that if something goes wrong in an equity fund and you have a 20% cut in a small cap fund, or you know, any of the stockbroking guys will tell you if there's a 30% cut in a stock price, there's not hue and cry about it because consumers understand equity risk. At least I think Indian consumers understand equity risk. Consumers don't understand bond risk. Indians come from a fixed deposit mindset. So they take the fixed word in fixed income very, very seriously. We know that when liquid funds are negative for a day, it creates a furor. So the steps the regulator is taking are welcome. And I think bond platforms, and I've spoken to multiple of them, really have to think about a couple of things. One is the selection of bonds that you have. I'm very encouraged, by the way, to hear that now there's a filter that's single A. You know, in my opinion, that should be more than that. But anyway, I think at least a credit-based filter is important. The second thing is liquidity in bonds. So to the chairperson's point, you know, as large institutions, we already struggle with liquidity in the bond market. So if it's difficult for a consumer to exit a bond product, I think that's the source of hue and cry. And even in our own industry, I think the issue has not been credit. The real issue happened in fixed income when there was a liquidity issue, and we know what we're referring to. I think two, and the third is transparency and disclosures. And I think historically, when you look at issues that have happened around fixed income or arbitrage products, even things like NSE, they have somehow fundamentally been related to transparency. So my concern with online bond platforms is if you're selling a high yield product, sell it as high yield. And make sure the consumer knows that it is high yield and that is what high yield can entail. And if you're able to get this right and innovate with right selling, then I think it's a very powerful construct.
And liquidity also, you said it's very...
liquidity is extremely important because finally our consumer is a fixed deposit consumer, and the promise of public investment products is liquidity, is that I can get my money back without thinking. And when there is a liquidity event, it sets all kinds of questions in the minds of the consumer.
Nikhil, just one more question before I go to the equity markets. But, you know, Radhika said about liquidity, that's a very important point. I mean, do you have any, I mean, what's been your experience with your investors when they want to sell bonds? Have they been able to easily get out of these online bond platforms at a time that they want, at a price that they want?
I would add one more dimension. I think it's the profile of the investor. Right? I think if we look at that, and you know, in the session before we talked about the 80% of the user and the last 1% of the user. Right? We're a very diverse country. Things work very differently. There are a set of users in this country who will tell you, I don't ever want to have liquidity. Please reinvest all of my returns and give me a maturity product after 10 years. I don't want to deal with reinvestment risk. And there'll be a set of users who says, I want everyday liquidity. Right? I think being as a platform, and that's what technology empowers you to do, to be able to also put a filter on who your user is, right? And the persona of person you're targeting is very important. Right? Over the 3 years that we've been in operation, we don't have a single person who's come and asked us for liquidity. Forget the concept of being able to provide it. There is no ask for liquidity.
So people have not sold any bonds that they've bought on your platform, not yet.
Yeah, no one's come to us and said, either please help me sell, or I'm not able to sell, please get me out of this, right? And bond markets, to Adhika's point, have very little liquidity, right? I think that's one of the things of making it available to retail at smaller ticket sizes and encouraging more issuers will create that liquidity, right? Okay. And we all have a role to play in making that happen. But the set of users that a bond platform should target today, and what SEBI has done by putting a 1 lakh rupee check is to cater to a set of people who don't necessarily require liquidity. If you look at P2P as an example, you know, most P2P platforms today have seen significant volumes because of offering any-day liquidity. But a very different consumer set invests on the P2P platform where a minimum ticket size can be as less as 1,000 rupees. Okay? So that's the difference we're seeing. I would completely agree with Radhika's point on on transparency, right? And that's where, again, SEBI's requirement for having a rating ensures that there is a clear demarcation for any user to at least have one check in place to say it's AAA, AA, BBB, and have some sense of what that yield is likely to be or what the risk is likely to be.
Okay. You know, let's talk a little bit about equity markets. Prakash and Praveen, both of you all, I want to take this to, you know, again, as far as equity broking is concerned, a lot of regulations have come in the past, you know, 2-3 years of client segregation, quarterly settlements, you know, business sustainability plan, etc. You know, how has the transition been? You know, this has all come at a time when the COVID rally has happened, you know, work from home, and, you know, people started the majestic COVID rally, which happened in 2020, and so many new investors have come, first-time investors have come. And at the same time, you know, you have to balance it out with additional regulations which could make life tougher. Many fintechs at least tell us privately. Where do you all stand, and, you know, how do you see this transition happening especially for online fintech platforms when they are actually trying to penetrate?
So, Kezad, on a lighter note, see, regulation or regulator is like exams. You know, when you're in school, you don't like it, but you don't have a choice. But you have to just go through that. But at the end of the day, when you give it an exam, you always come out wiser. From an annual exam, now we are almost on a daily or a weekly exams in last 2.5-3 years. So, but see, no
Do
one...
you think it's an over-regulated or...
No, actually, we were very under-regulated.
Okay.
See, if you look at broking industry for last 20, 30 years, there has not been any entry barrier in the broking industry.
Radhika, is mutual fund industry over-regulated or under-regulated? Okay, I'll come back to you
Because
again.
you're trying to play games with both of us, and he hit the ball out of the park, so I have to represent. I think we sometimes complain about regulation, but we've become a 40 lakh crore industry because we are the best regulated industry in the country. So I'm only thankful.
That I agree with you. Yeah,
So there were no entry barriers in the broking industry. Anyone who has a broking card could actually start. That created a lot of problems over the years. What has happened is that because of technology, and nowadays exchange regulators, no one is categorized as a broker or an exchange. Everyone is fintech. Exchange is a fintech, clearing corporations are fintech, brokers are fintech, depositories are fintech, because everyone every day is talking only about technology. And that is the reason, and that is a catalyst why you see so much of changes which has happened in last 2.5, 3 years, because technology could enable all that. It's just that because we are all averse to change, and that is the reason why everyone feels the pain of the change, and it is taking you out from your own comfort zone. But if you look at in last 2.5, 3 years, what has happened? We never saw the kind of demat account growth. From 3.5 crore, we are at 11 crore demat accounts. Broking industry, which was restricted to top 5, 10 cities, is penetrated across the country. You have millions of investors coming into, into direct investing, either investing into stock market or through mutual funds, but they have come. Third, everyone as an investor today feels safe. Even we all are on the other side, but we are also investors. Today we feel safe. Why? Because your shares are there in your depository, which you can see, which is again regulated. Your money can come in and go out as per your convenience. Your dividends, your corporate action, everything comes to your bank account. So there is a lot of security. Even the stocks which are listed on the exchanges, even the companies which are listed on the exchanges, they are far more regulated. So you don't have companies going bust, which used to happen in 94s and 96. There were plethora of IPOs used to come, and after 4 or 5 years, the stock prices used to be in some paise. So the change has been very good. What has also happened, there is a consolidation. If you look at today, broadly 70-80% of the market is consolidated with large players. When you have large players, both on the banking side and on the broking side, it brings credibility. You have deep pockets, and that's why you are able to do everything which a regulator wants, what a customer wants. So I think overall in last 3 years, I think it's a phenomenal move. Though we all are, we all chat sometimes. Praveen is smiling that what is the pace of regulation? Like every day we come to one circular. So today also there is a circular on the guidelines for cloud infrastructure. So you have to go through all that and do it. But I think it's all good. The costs go up, but end of the day, customers will also realize that whatever we are charging is not. We are actually paying them back by making the system more better.
Does it impact fintechs more than offline brokers, or it impacts the entire ecosystem?
It has impacted more offline brokers, because one day on 22nd of March, on 2020, you realize that your offices are closed. So people who are digital there could survive. People who are not digital by then, I don't know, perished. So people who are into fintechs, who have adopted digital, they are the ones who are thriving and growing. And that's why I think all of us are sitting here.
Praveen, you're the newest kid on the block, right? Raise Financials. So, you're coming at a time when so much of upheaval is happening, so much of inflows is happening. What is your sense?
I'll just quickly add on what Prakash actually said. Okay, it's like giving an exam every day. Just the different part of being a stockbroker is, you have, I tell my other friends who are fintech founders in credit or payments and all, you have only one headmaster to go and answer to. Okay, in our case, we have headmaster and we have teachers. Okay, which has exchanges. There are 3 exchanges. There is depository. There is a KRA and all. Okay, so the amount of exams that we have to give as a stockbroker is probably every day we have to repeat 5 exams. And it's before we could interpret, a circular, there's the next one. Okay, and we are still trying to figure out, okay, do we have a revenue line or do we have a customer line? What is the cost of impact? And so on. glad. I think I should be, again doubling down on what Prakash said is, I should be glad that we got into this business, okay, before this set of regulations came in, okay, because I think most of the regulations are now, okay, to curb a lot of menace that has happened in the history of stockbrokers. I'm sure everyone has an example from their friend or from someone they know in the industry about one fine day the broker vanishes, one fine day the shares vanishes, when the money goes off. And there are enough and large examples, I think everyone knows about it, okay. So all of this is done with a view of, hey, let us understand that no entity can simply register and get a stockbroking certificate, and you have a right to hold customers' money and the shares. Obviously, it's in depository, but there's a lot of controls that go behind. I think from our perspective, okay, we probably, when we also discuss internally amongst our teams, we say to ourselves that, hey, we're a financial services company, okay, because I think with the circle of friends that we have in fintech, okay, I think we overvalue a lot of tech and undervalue a lot of regulations and all, okay. I think that unfortunately is changing, not by design, but by regulations now, okay, becoming stricter across all domains, not just about stockbroking. The good part is today there's clarity amongst a lot of new players in terms of what is that I'm picking up for. Okay, so if a new broker is coming up, they know that, hey, these are the regulations that we need to follow. This is the capital allocation that you need to bring to the table. Okay, you can't be a small-time broker and then get a license and then figure out a way to do that. How does this all line up? Okay, if you just go to a SEBI website, you probably see there are around 5,000 odd licenses in the market. Maybe around 900 plus are active right now. But if you look at data on NSE, you'll see that almost 90% of business today is done with the top 25, 30 brokers. Okay, so if you're not among the top 30, 35 brokers, okay, you probably don't see the next 300, 400 surviving the next set of regulations, because they are highly demanding on product, highly demanding on technology, highly demanding on infrastructure and all. So it's clearly we will not have a market of 1,000 brokers. We probably have a market of 25, 35 brokers. And how it evolved in some of these developed nations is that if you look at US as a market, okay, I can't name more than 10 brokers. Okay, so I think eventually down probably 5 years down the line, 10 years down the line, okay, we might be in a scenario that a few brokers, probably for India's large market, maybe 10, 15 brokers would survive and all, but the kind of business that you will do, okay, is going to be a clear business. It's well-defined, well-regulated, where investors, when they're putting money, okay, they don't have to look at. In fact, before this, okay, I'm sure a lot of my mutual fund colleagues or my friends know in the industry, when I built the earlier version of our product, which was a Paytm Money, when we built a product for first-time investors, okay, we saw a lot of investors coming and putting in like the first 100 rupees, okay, of their investments. And we were surprised. They are withdrawing this amount, okay, on the third or fourth day. And we happened, what is this behavior? Why are you putting money and withdrawing? And the customer mindset out there is, no, we want to check ये चलता है कि नहीं चलता है. मतलब पैसा जाता है वो ठीक है, पर पैसा वापस भी आना चाहता है, okay? So I think those kind of fears, okay, which a regular investors would probably have, I think those fears will not be there, okay, going forward. So the way banks are looked as, an institution of trust, I think eventually stockbroking industry will also evolve to that phase where you are not just a mom and pop shop, okay, you are a financial services company which is offering a highly regulated product within the guidelines of what's defined in the industry.
But, so convenience, ease of use, definitely, transparency, definitely are good fallouts of regulations as you have articulated. I just want to play the devil's advocate for a second and ask you, do regulations tend to kill innovation? I mean, you take your example, you are one of the latest entrants in the market. How are you going to differentiate yourself from other existing players who've been around for, years and decades? I mean, with your, boundaries being set every day, how are new brokers or new fintechs who are going to come in, enter the space and make a difference?
I think this is my personal philosophy, by the way, okay, that no product is ever built, okay, till you actually, go and talk to customers, okay, and that's what most of us do at Raise, okay, we talk to our customers day in and day out. So if you look at payments, okay, we are all surprised that India has leapfrogged so much in the last 10 years when it comes to payments. But if you look at wealth, okay, I think digitalization of wealth is happening today. A lot of folks don't realize that the underlying exchanges today are interoperable. The clearing corporations are interoperable. The KRAs are interoperable, okay? And that gives a significant benefit to everyone, okay, for making sure the customer onboarding becomes easier. Now, what do the products that we are building, okay? So if you look at the products that are always been available for the last few years, okay, I think most of them were probably similar to each other, right? Okay, like we are competitors, but obviously, okay, someone invests via us and someone invests via 5paisa, okay. The guy investing on 5paisa is not going to get better dividend, okay. He's going to get the same dividend with the company declares. So all of us have to go ahead and figure out, okay, can we build features on top of that? Can we make his life easier as an investor?
More analytics, more
analytics, more data, more signals and all. And there are tons of opportunities like that, okay. And we believe India payments has leapfrogged, okay. There are a lot of folks today building on top of other digital infrastructure on lending side of things. There's account aggregator coming up and also these are things which will bring a lot of new opportunities. I was recently at an event in Singapore and it was a Singapore Tech Fest, okay, and people were discussing about the innovations that Ministry of Singapore wants to bring along. And I'm like, hey, these are things which are already happening in India. Okay, if you look at India as a country, I don't think any other country across the world is seeing so much innovation or so much triggers that are going in the digital infrastructure. Like UPI is the one which is most talked about. Okay, there is account aggregator, there are interoperability of all the platforms that we are talking about. Okay, and so on. Okay, and this is across. There is ONDC that we spoke about. There are other things that are coming up across all the platforms. Okay, so there are enough triggers, okay, that are available across the systems today, okay, that will make innovation possible. And the journey of building a better product never ends. Okay, so that's how we operate.
Fair enough, fair enough. Subramania, you've been one of the early entrants in the fintech investment product space, right? I mean, you started your FISDM in, 2015, 2016. And, a lot has happened since then. And many other players have also come in. Now, one thing that really fintechs brought on the table for investors is so much of wonderful way of investing and making it easy for them to do KYC, completely paperless way. As Praveen was saying, a lot of analytics, a lot of data at just a fingertip. Your UI is so smooth. I mean, with a few clicks, you can get to know, details of your mutual fund portfolios and everything. The challenge is that sometimes there is so much of information that, we can see technology everywhere. But what about the financial planning? Like, for example, I'll just give you an example. Like, I mean, when initially fintechs used to sell mutual funds, they used to give us like best 1 month return, 2 month return, 3 months returns. And, all we used to see was sector funds and thematic funds at the top. Now, that's a lot of smart user interface, but is that really the right way of selling? And then, investors investing in sector funds and tech funds without understanding what these funds are, the risk return, your risk assessment gap. So, when fintechs plan to get products out, what is more important for you as a developer, a technology hat or a financial planner hat? What do you wear?
Yeah, so thanks, guys. I think the first 5-6 years, everyone has spent time just creating access. I think advisory, helping customers reach their objectives, I think still is work in progress. And the reason is just sheer numbers, right? So maybe it's segue to the earlier question you asked. I think there are 10 crore demat accounts, probably the unique demat accounts, for some reason the DPs don't publish. It's somewhere in the 3 to 4 crores. Active MF investors, the other day the number came of 3.6 crores. And number of active traders is probably 2 crores. When I say active, someone who's placed at least one trade in the last 12 months. So the numbers are still small. Against these numbers, even a number that we all believe is really, really less, which is the number of people who file taxes, even that number is more than this number. So there are like 6 to 8 crore people file taxes, right? So everyone's focused on just providing access. How do I get someone to start trading or making an MF investment either the fastest way or the easiest way? How do I just make the customer just cross the hump, right? I think last 6-7 years has been spent on just on that, which has also been aided by Aadhaar, eKYC, and all of that. So now I think we've come to a critical mass where all companies have to think of beyond access. Why? 2021, you could touch a stone and you could make money. 2022, generally people lose money. And 2023, anyway, there's a slowdown in kind of new demat accounts, unique demat accounts that are being opened, right? So I think the market is kind of forcing people to think about financial planning, helping customers reach their end outcomes. I think there's very little work that has been done because everyone around this table was busy just creating access. The industry was engrossed with simplifying KYC for 5 years. Like Praveen and I worked together in Bangalore when he was in the earlier organization where we spent hours and hours together just figuring out, hey, listen, look, how do we simplify KYC? And I think it was a success. Now coming to this question about how do we help customers, make right choices. I think this is where more information we have about the customer, we are able to provide better advice. If we ask the customer to provide more information, customer is not going to give. There's just no way. KYC itself was a pain in the neck, right? Aadhaar KYC is simplified. In the absence of additional information, we just have to do rule-based, look, you ask the 3 questions and you answer. I think the account aggregator framework will probably help in aggregating customers 360-degree information about assets, liabilities, and ability to provide right recommendation. But that runs into the RIA regulations, which are, I would say, pretty stringent. It provides a certain highway to operate, but it also puts kind of restrictions in terms of what we can and what we cannot do, fiduciary responsibilities, which are all in the right sort of frame of reference. But the challenge is the following, right? One of the, you said we started in 2016. The key thing that's changed from 2016 to now, Kezad, is in 2016 it was all about, build fast, break things, and now it's all about be compliant. Right? That's the change in the language of startups, particularly fintech startups from 2016 till now. And the reason was, all startups have product managers. And if you talk to any product manager, they'll say they want to build features for 90% of the users. And it's a very common thing to say in startups, hey, listen, look, it's okay, ignore the bottom 10%. No one cares about 10%. And regulator thinks exactly the opposite. Regulator stands for the last man, and startups want to build for the 90%. And so to that extent, unless there is a DNA of regulatory compliance, there's a fundamental conflict between the way a startup, in the traditional definition of a startup, approaches a business problem versus the regulator approaches. And I think we've traversed the journey today. Every fintech startup, has moved away from build fast, break things to be regulatory compliant. I think the next wave of opportunity is clearly in advisory. Advisory, I'm using it a very loose word, not necessarily in the RIA kind of guidelines, but helping people reach whatever their financial goals or objectives are.
Putting the information out in the right way.
I think, I think information out in the right way is an easier problem, if you ask me, to be honest with you. But given where the maturity of the market is, customer awareness is, I think probably we'll all have to do more in terms of being able to ingest the information and make honest recommendations to the end customers, which clearly overcomes the principal agency problem that we've had in the industry for a long time. So if you ask me, the next wave of innovation will be in providing honest advisory to the end customers.
Radhika, do you agree with this? I mean, when so many fintechs are, giving out, schemes and performances and investment, I wouldn't say investment ideas, but, loose recommendations. Are they coming out in the right way, or is it too much of technology and less of financial planning thought process that goes behind it? Because there is, remember, these guys are targeting direct investors or do-it-yourself investors. Whereas, you've spoken about the virtues of, having an advisor holding your hand or having a distributor holding. And here the plus side is that there's so much of convenience, easier for people to get in, penetration happens. But the flip side is, are we seeing the right funds? Are we seeing getting the right information, getting the right messaging?
I'll tell you a 30-second story and then I'll ask from a fintech platform. Sometime in 2019, I used to get about 8,000 SIPs into Edelweiss Greater China Fund. And I'm not convinced all those investors knew anything about China. And it was largely through fintech platforms because it fell into one of those top 6 months, top 1 year, etc., things. And then 2020 and 2021 happened. In fact, we were the fund house that was not recommending that fund. And Many fund house CEOs will tell you they get money into funds that they completely sometimes have forgotten because they have too many schemes through these platforms. I would love from the bottom of my heart to see a fintech platform that shows me the fund that is down 30% over the last 1 year, but is really good on a fundamental basis, because we always say Warren Buffett, you know, greed, fear, all of that stuff. I would love a fintech platform that marketed Edelweiss Greater China Fund when the PE was 7 and the last 1 year return was 30%, because truly customers would have made money. And I think genuinely, I mean, you know, he made a great point. The first era of fintech was access. But I think access is now commoditized. If as a fintech platform, you have to differentiate, you have to move to the fin part of the fintech, right? We live in the era of ChatGPT and OpenAI, where a lot of stuff will be democratized. But here is where a smart fintech platform will now add value. And I think the one thing our industry has taught us, perhaps an older industry, is that it's good to get customers, but it's very important to make sure those customers have the right experience and they stay.
Thank you, Radhika. And I think we've just run out of time completely. So thank you so much.
Kesar, I just would like to add what Praveen, what you asked about the innovation in fintech, in regulatory environment. To be really honest, it is very difficult to innovate when you are regulated. If you look at every innovation across the globe, even in India, the innovations have happened either by government, which is Aadhaar, UPI, all are government entities, or innovation has happened outside the industry. So if you look at broking industry, actually innovation has not happened in broking industry at all for the last 30 years. We still do the exactly same thing. It's just that from shouting in the ring, we are now chatting on the Telegram chat. That's not change. What in finance, more than innovation in fintech, what is required is to keep your eyes and ears open, see what innovation is happening in technology around the world and how can we adopt it better. I think adoption here is more critical than innovating. So just wanted to add what
so one person is saying technology of fintech and one person is saying fin of fintech. But anyways, we'll both have their own fair points. So we'll end this discussion over here. Thank you so much for being patient with us. Thank you. And a big round of applause to the panel.
All right, there was a lot to absorb in, and I hope fintechs who are operating at the intersections were taking notes. Our final session is on a very pertinent topic, something that is also a bit of hot topic these days, lending and digital lending at that. How have digital lending guidelines changed the landscape? What are the new avenues of growth for fintechs? To discuss all this and more, please join me in welcoming Madhusudan E., the co-founder and CEO, first to moderate the discussion, and of course also welcome in Deena Jacob, co-founder and CFO Open. Also, Credit B. Gaurav Kumar, founder and CEO. You have UB Amit Pandey, Chief Revenue Officer, UGROW, to moderate the session. We're delighted to welcome the founder himself, Madhusudan R., CEO, M2B.
All right. I think, almost all of the fintech, lending is the magic wand for profitability. And that typically comes, as a last, quiver. And we are, probably going to have a quick 30-minute conversation around, what lending is all about before we actually break out for cocktail and dinner, right? So hold on to your seat, and I have like a very good mix of panelists. We've got a mix of consumer, fintechs who have been, crushing it on the digital lending side. We also have infra, in some sense, and the, SME representation as well, right? And I read a report recently of one of the, venture funds which spoke about how, the whole narrative around digital lending is so true, where they compared it, over the last 15 years, where it went from somewhere around 50 billion ballpark or 7% of GDP to close to 500 odd billion in the last 15 odd years. And they're pegging that to grow to almost about 20% of GDP to grow to close to $1 trillion in the next 3 or 4 years, right? So there's massive tailwinds that is going to sort of kick in, and that growth is going to come probably at 2 or 3x, and Nandan, of all the people, alluded to this recently in one of the conversations where he spoke about, the whole impetus that account aggregators is going to give, and it's also going to lead to a lot of job creation, because if there are 20 million SMEs, 40 million jobs are likely to get created because of incremental access to finance, right? I'll probably kick off the conversation, first going to you, Deena, and everybody keeps referring to data being the new oil, and you've been at the middle of a lot of the data, and we heard some of the panelists talk about how much of that data is really put to good use. What's been your experience at Open? Have you seen that getting deployed, or are you getting pushback from lenders or actual custodians of the data? If there is banks whose accounts get connected to the Open platform, what's been the experience? If you could share some light on that.
Thanks, Madhu. A very important, critical question in the current scenario. What we do as Open also is enabling the data to be in a very structured manner. So data is a new oil, but did we have dearth of data? But so far, I don't think that was the case. The problem was that it's like the letters of the alphabet. We had the data, we had it all strewn around, but unless you stitch it together, it doesn't make sense. So unless it becomes words, unless it becomes phrases, it doesn't make sense. And it's exactly the same problem with data. So when we got into the MSME sector also, it was the same issue. So when you're looking at the cash flow management, there can only be two things which can come out, which we spoke about in detail on the, if you have a surplus, how to manage the cash, for making money work for you, or if you have a deficit, where does it come from? But this is where the challenge is. When you look at the deficit part of it, data is extremely important to determine two things, whether you have the intent and whether you have the ability. So ability part and both the parts are being solved by data, and that's where we came in terms of enabling or making sense of it. So with the users also, what we do is that traditionally we had this challenge of, even lenders had the challenge of not able to put all this data in one place in a readable format. And that's where one of the major challenges, even for the user when they are approaching for a lending or access to lending, was the fact that they couldn't show structured data. The most important problem was also that the money flow happens in the bank and it doesn't talk to any of the other systems. And this is where, beautifully we had this discussion around the digital public infrastructure and, how all of that is crafting and coming together. And then there should be enablers for the user themselves to commit this data for somebody to use in a meaningful way. And that's what we have been doing. And that's exactly, from a way in which it has been received, and with the recent experience with the lending as well, where we were able to drive value within the ecosystem, that is, our conviction has only increased at this point in time.
Fantastic. And this also goes back to how even lenders are able to use that, put that data to more meaningful use, right, in terms of underwriting. There's always this fear of, I think, somebody sort of made a point earlier about that data being owned by someone, the regulated entity as such. Are you seeing more and more lenders coming and asking, how have you, underwritten, or new cuts they are looking at? Is that something that's you are already seeing play out?
So, see, what we have also taken is, completely cognizant of the regulation, completely cognizant of the fact that it has to be when it comes to money matters, we have to be customer-centric. We have been hearing it through the day. And we have to be like, in terms of the data and the privacy part of it, we need to be extremely sensitive. So these two aspects, in whichever ways we work, whether it is right from the cybersecurity angle to being today we are a PAPG also, so from a regulation and the scanners we should be coming under, the frameworks we should be working under, and in the aspects where we're working directly with the regulated entities, because we don't step on that, neither do something which we are not authorized to do, so to speak. So that's something which we have always kept as a principle. That being said, within that framework, putting together ecosystem and putting together, or for example, consent mechanism, completely it is if only the customer wants to commit this data for somebody's use and for a regulated entity, that's the only time when it goes. So it's our responsibility to ensure when we're creating a platform that is in compliance with every regulation that is there, right from data protection to the consent mechanism to who consumes the data. So all of those are taken care, and what we do primarily is how does the customer interact with the regulated entities to make it more effective. So that's where we come in and make a difference.
Fantastic. Madhusudan, if I can sort of, pose the next question to you in terms of, it's going to be the India's decade, in terms of the consumption credit story itself, all of the data points are pointing to that. You've been in the middle of this whole new wave of customers coming into the bandwagon for, probably NTC as the industry calls it. But you've had your fair share of challenges in the last couple of years. I would, challenges is probably the right word. There's been regulatory crackdown on certain business models. There's this imminent funding winter that we are all in the middle of. There's a new digital lending guidelines that came out. But we have emerged stronger despite all of this, right? What's been your take, and how has the outlook on the business changed in the last 12, 18 months? It's been very intense,
So good evening to everyone. Probably, the only one thing that he did not put across was, after all these problems, how did you even survive and why are you sitting here, right? So I guess he kind of put down that in way. But yeah, let me start this, right? So basically, what is the entire confusion or the chaos that has happened is, there was a largely an unregulated space with which we all started as fintech lending players, right? So then the growth itself was so massive. I think it was basically checked by the COVID scenarios where even RBI was kind of monitoring that, and when the scale was so large and they felt that with that kind of an explosive growth without any kind of a supervision or regulation that could come in, this could be a very, very systemic risk if any such event would bound to happen in future. I think that's where the regulations came in the picture, and then of course, so we have talked a lot about, there's frequent regulations, there's DLG and whatnot, but what I would assume is that if you look at the fundamentals of all this regulation, I think the regulator has tried to bring about a framework with which we have to operate. I don't think they are saying exactly that these are the exact boundaries within which you have to do the things or anything of that sort, but if you look at the fundamental frameworks, I think there is the customer protection, and there are certain guidelines in terms of how one could participate in lending. Basically, the regulated entities are kind of known to RBI to kind of participate in the lending, and that's what they're kind of appreciating it. And those are the framework what they're really doing it, rather than to come and say that, whether this is going to kind of totally jeopardize the innovation that could happen and whatnot. Now, you talked many things in that question. So I think when we all started, there was a view. I mean, there were two extreme views about the fintech lending or the fintech sector itself. That are these? I mean, the earlier questions what I used to face was, are you the challengers to bank? I mean, our fintechs are going to be bigger than banks, and bigger banks will nowhere be in the picture. This was the first questions what I used to kind of answer when all it was jazzy and whatnot. And then, there was a kind of a storm that was created because of there was many things that happened in the market, the regulations came in and everything. Then the questions which were asked by the journalist friends here was that, is fintech a bubble that is going to burst? Right? So those are the extreme things what probably this industry has seen it. I think the answer today is that it's going to be a coexistence with the lending ecosystem, right? So it could be banks, it could be the corporate NBFCs or the NBFCs which are matured over the years in running in a traditional way or a non-digital or a not completely digital way. I think the coexistence is what will be the answer. Fintechs are nimble. They can kind of get this technology front. They can change faster. They can adapt to the customer behavior and whatnot. But definitely they don't have the kind of balance sheet what the entire banking system provides. And therefore that coexistence would be the answer for the fintechs to kind of move forward. And definitely the last point was on your the winter to all this funding and everything. I mean, I don't know, I should feel fortunate because I just closed my series deal last month, so I don't know how should I take that. So yeah, definitely there is a winter, but I think the fundamentally good business models would get identified by the investors, and I hope to see that the winter actually kind of goes down way faster and gives a boost to the entire industry.
Yeah, I mean, I come from Chennai where winter is a pleasant thing. So we always have this view that I always tell investors, when we talk to them saying, winter is a nice thing in India. You probably have to get a new verbiage. But just taking a segue from what Madhu just spoke about, Gaurav, you've been at the forefront. I mean, you probably have a front row seat to a lot of the action that's happening on the consumer lending side. And you had this market operating in a certain way, and obviously the regulator crackdown. A lot of the founders are trying to figure out, business teams are figuring out new business models to sort of evolve. Are you seeing early green shoots of how some of those businesses have evolved from a digital lending standpoint? While the core remains the same, there's a consumption credit need that is getting met, but the vehicles through which it was getting distributed, PPI, cards were a great product, from a consumer lens. But how are you seeing that business getting redistributed, or what are the new green shoots that you're seeing on the consumer lending side?
I think what we are seeing largely is, today, kind of sharing this with, someone at the bank, that one of the biggest innovation to my mind coming out of RBI, especially in lending, I think is going to be co-lending, right? And I think co-lending currently is understated, like what UPI has done on the payment side. I think this is going to be the biggest innovation coming in on lending. So today, if you look at what has shifted, I think what we are seeing is today largely partnership or ecosystem lending, coexisting between an RE and I would say non-RE, and as well as an RE to RE, right? So what we have seen now is there is very high degree of clarity when a bank is working with a non-RE, right? I think there has been some shift in terms of how some of the players were operating in terms of card or PPI, but a lot of that has now moved to, I would say, personal finance or I would say consumer lending. Second, we are also seeing a shift between how public sector banks are actually using partnerships, right? Whether it is with NBFC or it is with housing finance, they are actually using this as their own mode of distribution, right? Where public sector banks genuinely kind of thrived was largely on deposit and cost of fund. What they did not have was largely distribution. And I think this is kind of adding an edge. And today we are privileged to work with most of the public sector banks. I think segments which are, I would say, largely liabilities business, which is prime personal loan, auto loan, mortgage loan, public sector banks are going to come back with a vengeance. I think that's a space which they have seeded. Where we are seeing even foreign banks now is largely on prime PL, right? So, a lot of foreign banks are now looking at using fintechs for prime PL origination. So I think this, to my mind, is going to be the next wave. I think there have been challenges, and like what UPI has been able to do in payments, I think lending is far more complex than payment. I'll just share one example that today, if you look at a mortgage loan, the same loan is being underwritten very differently by different banks, right? So today, a public sector bank needs 1,640 touch points to underwrite a mortgage loan end to end, right? Whereas a private sector bank on the other side might only need 840, 850 odd touch points, right? So that complexity on lending, I think, needs to be simplified. And then last point I would make is that banks are horizontal. The providers of capital today are horizontal, and the players who are playing on the other side, whether it is fintech or like Madhu or what we are seeing in terms of NBFC, they are largely vertical, right? So you definitely would see 3 years, 4 years down the line, you will definitely see both intraoperability as well as interoperability, right? So a bank which is on supply chain trying to move to consumer lending or to pool purchase, right, or to enterprise loan, how are you going to be interoperable, right? Because you're talking to very different systems on the other side, right? So I think to our mind, next 4 to 5 years, what RBI has done, I think this is going to definitely de-risk the ecosystem. It's not just about access, but also opening different frontiers of where this will go.
Yeah. Just one follow-up to that, you spoke about co-lending being a theme, and there's a lot of nudge from the government also to actually adopt that. Is that benefit of co-lending getting passed down to the customer, or is still early? Is it, the margins that you save because of a balance sheet, leverage? Right. Is it actually getting passed down to the customer?
and we have been at the front end of this. So I'll just share with the audience as well. So when we are looking at our numbers a year back, we used to do 1,600 loans a day. Now we do close to 29,000 loans a day on co-lending. I would bring out two trends, right? A year back, co-lending was largely about liquidity, right? So a lot of players were trying to do co-lending where they did not have access to liquidity. Now co-lending is not about liquidity, right? Because the biggest of players have come into co-lending. What we are seeing is largely either it is about cost of fund or you trying to get into an adjacent space which you are not servicing, right? So where, if I have to simplify, a lot of low ROA business for an NBFC, which is definitely a slightly more higher ROA business for a bank, is what will go there. That's what we are seeing in mortgages, etc. I think to more a technical point to your point, I think the benefit of co-lending will start getting passed on to the customer as the ecosystem matures more on co-lending model 1, right? Where disbursement is happening real time between two partners. And that's where you can go into dynamic pricing over a period of the next 4 or 5 years. The pricing will remain largely static in CLM2, which is largely priority sector or this more quasi direct assignment is what you see.
Sure, yeah. Amit, if I can come to you, I think SME is the red hot segment in terms of lending itself. There's a lot of promise. There's also a lot of push from the government, in terms of to promote, SME businesses. And account aggregator is seen as the, magic wand, if I can use that, to actually accelerate, the whole access to finance for SMEs. Are you seeing early adoption of account aggregator in a meaningful way, or it's still in a POC phase that we'll have to navigate, some more before we get there?
No, so there is surely adoption. The adoption is on both sides. One is on the lender side, one on the consumer side as well. But it's about just a year since this concept started, so it's surely evolving. If one were to look at it in the early stages, not all data was coming in the right format or the right manner that we wanted. Early stages, the line products from the banks were not integrated. And so the data was half-baked. Today, I think the data integrity is far higher, and therefore the ability of a lender to look at an account aggregate data is far higher. That's number one. Two, more and more data will come in through the account aggregators. So GST has already been brought into the regime, the capital markets regulators already signed in, mutual funds and insurance companies will sooner or later come in. So what account aggregator is finally going to be one source of financial data for a business need. Right? So when I said the adoption, there were impediments. There were these concepts about some line products not coming in, some banks integrated, some banks not integrated. Today, if you look at it, an individual ping has about a 90% positive rate. But there's still a long way to go on the ping on how does this data come for entities like a partnership or a private limited. So that's still yet to be solved. So it's an always evolving system, and I think as the system evolves, the lenders will have to keep evolving their tech stacks and their credit models to adopt to this process. The second piece about adoption is also at the consumer level. And there's a lot of education that needs to go at the consumer level because it's still about creating an account, getting OTPs, and the consumer is still worried that all these 5 accounts will be visible to somebody. That's not the culture that we are an MSME lenders, and that's not how an MSME is wired to show clearly, be transparent about all these 5 accounts. So that education and adoption will take time, but eventually I think this is the way how MSME lending will happen in the country.
Fantastic. Dina, what's your take? I mean, how are you seeing AA adopted, or have you implemented some of that? Any early success that you've had?
So definitely, in terms of the usage of the AA or the intent, I would say that while there is some way to go in terms of that getting mature and completely effective, but this is a very, very crucial, it's going to play a very crucial role in the entire enablement part of it. And we have seen adoption, but at the same time, it's a known fact also probably on the usage when it comes to on success rate. There are various things, right? And including the participation, success rate, everything. So while that being said, one understands there is a maturity curve which is there. But it is, if you were to look at it, probably at 12 months earlier to now, it has evolved in a big way. And you are seeing a lot of, initial resistance in terms of even the participants. Both sides are getting mature right now. So I would say that we are definitely using it, and definitely it is going to pave the way for a much larger way in which credit can be seen in India. And this is going to be like, for example, all of these part of the pieces which are coming together. Because I'm a big believer in the long-term way the lending has to become contextual. And for that, again, it has to come together as a complete ecosystem, right from different places from where data can be pulled in, to how it can be, who and how reads it, even for underwriting. It can be alternate data, it can be banking data, it can be, now that the GST data is coming into the AA. So all of these put together will become the enabler, and then it will onward go and sit where transactions happen. So that's going to be a full circle, and that while we are building different pieces of it, and as an ecosystem, this is going to be, AA is going to be play a very big role.
Yeah, thank you. Madhusudan, the whole, I think you probably, is the digital lending guidelines that sort of came out, right? I think that probably is kind of provided a framework from a consumer lending standpoint, right? Has this impacted your business good way, bad way, or is still not fully played out? Have you seen a change in the way banks are looking to partner up if there's a co-lending opportunity that you're pursuing? What has been, it's been 6 months now almost, what's been the outcome?
Yeah, sure. I guess, before the digital lending guidelines actually came in, I think the industry was kind of confused whether is this model right, is that model right, and whether this practice is right or not, right? So that was the idea, and everyone was trying to kind of give it to their own sense. Ki shayad, if I go in this way, probably this is right, and this is how I read the earlier regulations of NBFCs and everything. But what was different, right? So what was different was there was an internet and a digital angle on top of it, which gotten rise to some of the platform models or some of the non-RE, what we would technically call them, right? So I think because there was a non-RE or a technical player or a platform player came on top of this banks and NBFCs, there were many things that were assumed to be kind of deemed right, and that was not very uniform. Or it was largely they were in a unison, but not exactly uniform in the way that the assumptions were being made. I think that was the need, and also it's not, so we always went to RBI asking various questions also. I mean, that would have been the other prompt for the regulator to come with the guidelines, because we always went and asked these questions. And since there was no regulation, they could not answer it rightfully. I mean, always the RBI answers based on certain documents, guidelines, what they've already built, and without that, they would never answer anything there, right? So even though they feel it is right or whatsoever. So I think that prompted for the digital lending guidelines, which we all asked for. And if you look at the entire guidelines itself, I think I would say there are two parts to it. One part is totally addressed towards the hygiene factors of the lending, right? So I don't think it is a new thing. They have re-emphasized what the mandates have been made for banks and NBFCs, that the same thing has been re-emphasized a lot, that even though you are a digital lender, we also want to see you that you follow these kind of guidelines. Now there are the other part which probably touched certain sensitivities of the entire industry was on certain factors like, FLDG is the most talked about factor that, which was kind of touched upon, right? So, and that is the only point what I see has come out, which probably was a major accelerator in the industry growth, and now there is a certain unclarity, clarity, whatever it is. So that is being sought now, right? So I think apart from that, if you look at it, I don't think there was anything that was not to be kind of deemed fit by the NBFCs or any lending activity. I think this is the only clarity point. Probably the industry is kind of now trying to look at the regulator in terms of giving more clarity. So in all, I think it consolidated and really made the businesses much more stronger, because see, we have seen this, right? So there was a MFI crisis, right? So and MFI went through this entire journey. Only after the regulations came in, I mean, 7 or 8 or 9 out of the small finance banks have grown from the MFI world, right? I think although in a shorter term view, it all comes with a lot of pain, but in a longer term view, it stabilizes the companies to kind of grow and become much larger players in the ecosystem. I think that's the way I kind of look at it, and probably I welcome them. But yeah, of course, some of the early entrants and the mid players do see certain pains. especially with respect to the FLDG factor. That needs further clarification. Yeah.
The synthetics securitization needs to be solved yet, right? Gaurav, if I can come to you, you touched on this whole co-lending and how banks are now participating, more and more public sector banks are participating, and Mr. Vaidyanathan also in his sort of comment spoke about thinking beyond, couple of products that banks have traditionally done, vehicle loan and home loan and things like that. Do you see this as like probably an opportunity for the industry to sort of evolve to a model where a lot of the fintechs will focus on innovative new products, while increasingly banks will have that balance sheet play and just be a passive co-lending sort of, and a balance sheet provider of sorts? Is that reality, that's kind of dawning on us, or banks are still not warmed up, they're still going to traditional products where, there is certainty around ROA and, a PL, I can worst case flog my branches to get another 100 crores, in the last 3 days of the month, right? That's been the thought process. How are you seeing it, from where you sit in terms of how more and more banks are looking at innovative products on the lending side?
I think we are seeing right across the spectrum, right? So I think today if you look at a foreign bank, whether it is consumer lending or even supply chain, right? Because what foreign banks don't have is again branches, and you don't now need branches, right? Because you can partner with anybody, right? To get that kind of distribution going for you, right? So whether it is retail or even supply chain, so you see foreign banks on one side, you see private sector banks today, I would say barring, HDFC Bank, others are already in. There is definitely a conundrum, right? To say, if I have my own distribution, do I need to partner? Right. And if I need to partner, then on what product do I really need to partner, right? And what the fintechs constantly think is that are banks only partnering with us in the short term, especially if you are in the consumer space, to take away the customer and start doing cross-sell on their own, right? So I think, but cross-sell in my own experience is the most discussed word in boardrooms. Is very difficult to kind of cross-sell on the ground, right? So that's one piece which you see. What we are also seeing is largely a very tighter collaboration as we move forward, right? So you will see a lot of innovation coming in on the ground where customer experience will become more meaningful. One trend, at least my personal view over the next, if we take a slightly more medium-term view, I think the other side will start becoming much more horizontal. Fantastic. So I anticipate, somebody like Madhu who has started in consumer, becoming more horizontal on product, whether it is a two-wheeler finance or it is, insurance or any other form of financial product distribution. I think banks will be able to support, because now you don't need that cost of fund, because a lot of what was getting manufactured was largely to do with own balance sheet, right? And that's how it was getting priced. One last data point, I'll leave it with you on housing finance, for example, today. Why co-lending or partnership is becoming big is because every year close to 14 to 15% of your customers actually beat it out, right? So they actually moved out because that's one product which is very sensitive to liability, right? And now, housing finance companies can actually retain those customers. So I think it's going to be to my mind, innovation plus retention game and becoming more horizontal as we move forward.
Sure. Just the last question to, Amit, in terms of, traditionally you've had, SME business loans characterized by segment, right? So I could be, let's say, a trader in a specific segment. So there is a certain set of lenders who kind of service, that industry as a whole or that ecosystem as a whole. Are you seeing new, cohorts of companies or businesses or business models getting underwritten? I'm not even alluding to what, the earlier conversation around AA and all that, but are we truly seeing the emergence of new segments being underwritten because of GST data and whatnot, which otherwise was not present maybe even 2 years ago?
So one has to look at it in terms of what are these segments and what is servicing the segments. Are there specific ecosystems that service these segments, whether it's in supply chain, whether it is on their own digitization of product? And is there data available to therefore extend credit? So there have been multiple different ecosystems that work either in pharmaceuticals, either in manufacturing. There are a lot of examples of aggregators, demand aggregators, who have been working typically in one commodity aggregation, who've then integrated backwards to provide credit to that kind of customers. So absolutely, sectoral focus of either a ecosystem or an entity therefore allows it to entrench itself better there. And therefore, the pie kind of keeps increasing because there is very sector-specific, ecosystem-specific data available. And that's happening across. So a lot of banks and BFCs have been, therefore, partnering with either these fintech ecosystems, let it be payments ecosystem, e-commerce ecosystem, supply chain platforms. That's where people are partnering to be focused on certain ecosystems. If you want to get into a complete apparel industry, then you will therefore partner with the e-com apparel giants and therefore go into their ecosystem. So absolutely, data apart from just banking and GST, this alternate data is very crucial and is the fourth layer. So the three data that are democratized today, the bureau, the banking and the GST. And this fourth layer of data, which comes from a particular ecosystem, just helps lenders focus on the ecosystem. So the lenders will keep entrenching themselves in multiple ecosystems and therefore ensuring that the credit really goes to the last mile with an informed decision.
Fantastic. I think you're completely run out of
just
time.
Before
here.
that, so definitely I'm not a spokesperson on the regulation or regulatory side, although everyone else got to speak about business models and whatnot, and I don't know, Madhu was very, very considerate enough to kind of ask me about the guidelines and whatnot.
After the last session, I feel RBI has been kind to us. So, SEBI seems to be, as a regulator, a lot more. Everyday tests is not something that we do, although we get circulars almost every other day. Thank you everyone. Thank you.
Thank you for that wonderful session that decoded the future of lending for fintechs. With that, then we come to the end of this power-packed first edition of Moneycontrol India Fintech Conclave. We hope you enjoyed it, and we promise a bigger event next year. We look forward to your feedback. Thank you again to all our partners, speakers, guests, attendees for making this such a memorable event. What a better way to end Holi than proper party? Join us for cocktails.
Moneycontrol India Fintech Conclave. Connect, ideate, innovate.